This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Friday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find the video aspect of this show here this morning. Tom Keene is off today. I don't know where he goes, what he does on a Friday off, but Alix Steel sitting for Tom. So how good is that? Alix, thank you so much for hanging with us for the next 3 hours.
You bet. Good morning. So does Tom watch and send notes during the show?
I don't know.
So
I just assume he's at some cafe in Paris or Milan or Rome, and he's having an adult beverage in his hand. That's what I envisioned that Tom does on his day off. All right, coming up, Nathan Dean, a Bloomberg Intelligence senior policy analyst over there. He's got to tell us what's going on down in D.C. I have no idea, but Nathan Dean, he's absolutely wired in there, so he'll check in with us and give us his thoughts. Amanda Gotti, CIO at Asset Management at PNC Bank National. She'll give us her thoughts on these markets. Ayesha Kiani, professor at NYU, and COO at MNNC Group on the outlook for Bitcoin and digital assets. She's going to be in studio. I've got Bitcoin now well below 100,000, so I'm not really sure what's going on there. 92,000. Remember, we were at 107,000 just a couple of days ago, so we'll figure out what's going on there. Katy Kaminski, Chief Research Strategist at AlphaSimplex, really smart person. We'll get her thoughts on these markets. So a lot coming up in the next 3 hours, but first, let's kick it off. Lisa Mateo, Bloomberg Business Flash. Lisa.
You got it. And we've got futures. They are declining. This is a trader's weighing this possible government shutdown. Also looking to PCE data. That comes out at 8:30 Wall Street time. The Fed's preferred inflation gauge was expected to cool in November. We have NASDAQ futures down more than 1%, 302 points. Dow futures tanking down 0.5%, 226 points. S&P futures down nearly 1% or 54 points. The 2-year yield 4.28%, down 4 basis points. The yield on the 10-year 4.54%, and that's down 1 basis point. The Bloomberg Dollar Spot Index is down about 0.1%. Shares of Novo Nordisk, they dropped as much as 20%, 27% in Copenhagen, the steepest drop on record after it said its patients on its experimental obesity shot lost less weight than predicted in a study. Now, shares are down about 15%. Eli Lilly, though, those shares shot higher on the news. They're up about 6%. And FedEx announced plans to spin off its freight division into a separate publicly traded company. Wall Street, seemed to like that idea. Shares are up 8%. There you go. And Nike, their second quarter results surpassed expectation, but its new CEO said that the turnaround efforts may hurt earnings in the short term. Its shares are down about 4%. That is your Bloomberg Business Flash. Wah, wah. Paul and Alix.
Lisa, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers Studio, streaming live on YouTube as well. Bloomberg Surveillance today brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. You know, tonight at midnight, I'm not really going to be too focused on what's happening with our government, whether we shut down or not. I guess when I wake up Saturday morning, that'll be a thing. I guess it's back on the table. Nathan Dean, you're the senior policy analyst for Bloomberg Intelligence. I kind of look to you, Nathan. What's happening here tonight at midnight with our government?
Yeah, so obviously, the agreement between President Trump and the Republicans failed last night to garner enough votes to get to the Senate's desk. So I think what happens is there is a decent chance the government shuts down tonight, but I do not think that shutdown lasts through Monday. Look, I just go back to the time that nobody wants to see a shutdown over the holidays. So what does Speaker Johnson do here? I think he has 3 options to avoid a shutdown. The bill gets bigger. Goes back to the original agreement with the Democrats. I don't think Elon Musk goes for that. The bill gets smaller. This is probably the most likely scenario. You exclude the debt ceiling. President Trump's not going to like that, but maybe you say, hey, we're going to have a vote for it in January, or you pass a 2-week stopgap and we have this debate all over again right before the new year. But I do think that an agreement can be made probably over the weekend so that if you're a government worker, you'll probably have to come into work on Monday.
Okay, so yesterday when we talked, Nathan, you said 40% chance of a shutdown. Where are you at right now?
So I still think 40% by Monday, but I just don't think logistically Congress can come up with an idea to get it to the president's desk tonight. Because if you remember, yesterday's plan was including the debt ceiling, plus a clean CR, plus the 1-year extension of the Farm Bill, plus disaster aid. That's usually a bipartisan. I don't think that, many folks, if the Democrats were to help the Republicans out here, they'd be able to get it to the president's desk. The problem was the Republicans weren't able to get it past their own party, and the Democrats refused to help out because they originally had an agreement and now they don't. So I think that once we go through the political headaches, and remember, this is what happens in government shutdowns all the time, until their back is against the political wall, meaning until those government workers start coming in on Monday, or until the furloughed employees across the nation, until they get into that political back wall, they don't make a deal. So I think it wouldn't be surprising to me to see Speaker Johnson say, look, logistically, it's going to be very difficult to do it today. Let's go to work on Saturday and Sunday and maybe see if we can figure something out.
Nathan, was it a surprise to you and your buddies in Washington, D.C., that the Trump-backed U.S. funding plan did, in fact, fail?
Yes and no. I mean, certainly was a surprise to see President Trump come out so harsh, or maybe just so intently in trying to get unity amongst his party. Because remember, Speaker Johnson only has a handful of individuals, and there's always been a handful of individuals that will, no matter what, say, I'm never going to vote to increase the debt ceiling unless there are fiscal cuts on the side. And this is Chip Roy of Texas in particular. And President Trump went out, even said, look, I'm going to primary Chip Roy, or somebody should primary Chip Roy. That was very surprising to me. But, how the Republicans ultimately voted against the debt ceiling, and there were 37 of them that voted against this, that wasn't so much of a surprise, because for the last 10, 15 years, they've been saying no circumstances whatsoever we're going to increase the debt ceiling, and they stuck to their guns.
Uni, is that the cool kids call unification or united? That was pretty cool. I don't think I've heard that one before. Nathan, just one more quick one before we go. How much sway do you think who's going to be running the shots in the next 24 hours? Is it Trump? Is it Musk?
I certainly think it's President Trump. I think certainly you may see Elon Musk come, but Elon Musk's whole point was to stop a very big bloated Christmas tree bill, and I think Elon Musk is going to hold to that guns. I think Speaker Johnson now is going to try and figure out, do I do a 2-week stopgap, or do I slim the bill down and try and convince President Trump that we will give him that debt ceiling provision maybe in early January before he becomes into office?
Nathan, you're the only one in D.C. that I trust, so I want you to head up to the Hill, get something done there. So we don't need a shutdown. That's certainly the case. Nathan Dean, senior policy analyst for Bloomberg Intelligence. He's down there in Washington, D.C. He's the one that kind of keeps us up to date on what's really happening down there in Washington, D.C. So we appreciate a few minutes of his time. Let's talk about these markets. Amanda Gotti, she's the CIO, Asset Management, PNC Bank, joins us here. Love to get your thoughts here on these markets. 2024, Amanda, great year for the S&P 500. Fixed income, you actually made money in fixed income in 2024. What are we doing in 2025? What are you telling your clients, Amanda?
Well, it's great to be with both of you this morning. Thanks so much for having me. We think 2025 can be another positive year, but we're really focused on trying to recalibrate our clients' expectations around what success might look like in 2025. We've had some really strong returning years, as you said. Multi-asset investors have to be pretty happy with that. But I think the pace of advancement in 2025 is going to be quite a bit slower than what we've seen the last few years. And it doesn't mean that it isn't going to be a successful year. We think the path forward really tracks in line with the path for earnings growth. But where valuation multiples are trading today, it doesn't leave a lot of headroom for material expansion from these levels.
Exactly. So consensus is already at what, like 13% for 2025 earnings for the S&P, right? But then you price in where the S&P's at, and Bloomberg Intelligence said it's already like 25%. It's just huge. So how do you manage that? Is this a sector-specific story for you?
Well, it's very hard in this environment, as the prior segment, I think, showed the noise that's going on in Washington. It's very hard to pick sectors with any kind of degree of clarity right now, with so much extreme fiscal policy uncertainty coming out of Washington. And so we're really not focused on sectors so much as asset classes and also factors. I think factors may be a better, more effective way to play this environment here, at least in the first half of the year, until we get some more policy clarity.
So, Amanda, I mean, the Mag 7 has been such a great trade for, I guess, 2+ years now. And I'm just not sure if that's the leading trade into 2025. How do you think about that versus maybe more a broader view of the market?
Yeah, we're very focused on the expansion of market breadth. It's actually narrowed since the election,
You're
so
right.
it's going
Yep.
in the opposite direction here. But we do think in 2025, as the Fed continues to loosen up policy a bit, maybe less than what perhaps investors would like to see, but as we start to see a little bit looser policy, get a little bit more clarity on the fiscal policy front, market breadth should start to expand. And so that bottom 493 in the S&P 500 should start to reassert themselves again. We don't want to be net short the Mag 7. That's not the trade that we're looking for here. But I do think a healthier expansion of this market rally also means an expansion in market breadth, and we just haven't quite seen it yet.
No, we haven't. I'm also looking at the deterioration, by the way, in the market right now. The S&P futures is down by 57 points. NASDAQ 100 down over 300 points, really underperforming.
Wow.
The Dow is off by 224 points, and we're seeing some buying pretty much all across the bond market. I know it's short term, Amanda, but do you think the price action is being dictated now by the worries of a government shutdown, or do you just feel like we're position squaring?
And I think a lot of it is actually the noise coming out of Washington. I don't know that there's a fundamental deterioration or breakdown here that's causing the market to kind of unravel. I think it's a lot more about what's going on in Washington. You know, post the election, the market had to recalibrate for a red wave scenario. That was not the consensus view. We were going to see a bit more division in terms of control in Washington. And so the market anticipated that the new administration was going to get organized very quickly, get a whole bunch of things done. And I think what you're seeing here is it's not quite as easy to do that. And so the market's trying to recalibrate around that.
Amanda, I know you're a proud graduate of the Penn State University. On a scale of 1 to 10, 10 being the best, how was your experience at Penn State?
Oh my God, infinite.
See?
Really?
It's called Happy Valley for a reason. And by the way, when I get done here, I'm headed up for the college football playoff game. Can't wait.
So, you know, we're
going to freeze.
Amanda, do you know
awesome.
Dan Ives from Wedbush Securities?
Yes, of course.
Of course they know each other. All right, so they're going to be sharing, I'm sure they're going to be sharing like this box at Penn State University.
Oh, yeah, because you're indoors in a suite, right? You're
exactly. Yeah, they're not going to be out there. So, I mean, Amanda Gotti, Dan Ives, I mean, two proud Penn State graduates. Again, they're in the football playoffs starting this week, which I think is pretty cool. I don't know. So, Amanda, thank you so much for joining us. We appreciate it. Amanda Gotti, she's the CIO at PNC, which is Pittsburgh National Corporation. Before that, Pittsburgh National Bank. Asset management in Pittsburgh, one of the really, really good regional banks, I think, in this country. PNC is a good place to be. Looking at this market here, again, boy, I didn't really know the market was selling off this much until you mentioned it. That gets your attention here. We got the S&P off 1%, futures in the NASDAQ off 1.5%. I'm saying, what's dragging the futures down? So we've got,
also,
some of the...
It's triple witching. Let's not forget the triple
witching. All right,
witching.
so when I was a kid, triple witching was a thing.
Yeah.
Is it still a thing?
I mean, we say it's a thing. It's something to talk about. It just means some little, more shares change hands at the open and the close. But no, it's not really a thing.
All right, but I'll pay attention to it.
But I'm going to talk about it.
And at 4 o'clock, I will not be paying attention to this market at 4 o'clock today. I'll tell you that. That's up to Carol Masser and Tim Stevanovic.
Yeah. I'll be on
Tom
TV,
Keene would
man.
say. Oh, you'll be on TV, so you're on. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. All right, we've got futures falling after a revised funding plan fails the House vote. NASDAQ futures down more than 1.5%, 337 points. Dow futures down 0.5%, 250 points. S&P futures down more than 1%, 60 points. The two-year yield, 4.27%, down 5 basis points. The yield on the 10-year, 4.54%, and that's down 2 basis points. To commodities, we have Brent crude down nearly 1% at $72 a barrel. WTI crude $68 a barrel. We have spot gold higher at $2,604 an ounce. And the Bloomberg Dollar Spot Index is down about 0.1%. Bitcoin, have to point that out, down 5% at just above 92,000. Few companies making news. Foxconn reportedly pausing its pursuit of Nissan while Nissan negotiates that potential tie-up with Honda. Now, sources say Foxconn wants to hold off to see if the two companies actually get closer to a deal before it makes a move. And the union representing Starbucks baristas plans to strike for 5 days starting today, taking place in stores across LA, Chicago, and Seattle. You might have to wait longer for that latte. Shares are down about 1%. And billionaire Frank McCourt wants to buy TikTok for $25 billion if ByteDance is forced to sell. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Bitcoin, I'm calling it out for Tom Keene because he is obviously a huge fan of the cryptocurrencies. It was 107,000, just like a cup of coffee ago, as Tom Keene would say. Here we are at 92,000. To me, I view, this is just my personal view, I view it as a commodity.
Okay.
Gold. Mm-hmm. It's just supply and demand. That's what, to me, that's how I view it.
So is that a safe haven call then?
I
don't know.
I don't know.
Okay.
It's oil, it's gold. I don't know. But our next guest is a professional on this stuff, Ayesha Kiani. She's the COO of MNNC Group. I'm not sure what they do, but that sounds good. Ayesha, can you talk to us about how we should think about crypto in general? How do you think about it?
How do I think about it? I mean, I put it on a pedestal because we are a hedge fund that trades it.
Okay.
So that's what we do.
Yep.
We make liquid markets for it. The second time I was on this show, I called Bitcoin at 100,000.
Did you?
Yeah. And Tom laughed at me.
Victory lap. We like that. Go ahead.
Yeah. Tom laughed at me. He was like, no. You're a professor. Like, shouldn't
Right.
you be serious? And I said, no, I'm very serious because we see it at that value. And this is before even the election, right?
Okay.
Before the election result. Yes, we view it as a commodity.
Okay.
It is setting, a groundwork for digital assets. And I think that, that's where the economies, that's where the technology is headed anyways, right? Like more faster, processes to exchange money, more faster processes for cross-border payments. And the technology behind Bitcoin sets that. Mm-hmm. But there's like a lot of groundwork being done. The only reason we've seen that kind of price action just recently is because the upcoming administration is pro-crypto. So that's why the markets rallied.
So MNNC Group is a quantitative digital asset investment firm. So it's not just Bitcoin. It's digital assets, which is a huge step in technological advancements. I get that. So how do you look at an asset that's crypto related and then you got like Fartcoin? You know what I mean? Like, how do you distinguish these two things? Good morning.
I love your knowledge on it. I love it. Fantastic. So Fartcoin is a meme coin.
Yeah, it's a thing.
Is this Howard Stern?
No. This is Bloomberg Surveillance Radio at 7:20 on a Friday.
Okay. And I have to go and teach my kids at NYU after this. So imagine if like any one of them ended up catching this on TV. But meme coin, right? Mm-hmm. Even though these are just useless tokens that are being traded in the liquid markets, in my very personal opinion, and I talk about this like in my class, look, guys, these tokens are literally putting blockchains to work, right? So if this token is based on Solana, or if this token is based on Coinbase's base, that is just making sure that the blockchain actually works for that kind of fast buy and sell transaction. That's the use. I mean, that's just like kind of testing the technology if it works or not. But yes, does Fartcoin has an underlying value? Absolutely no. Does it make sense to exist? Absolutely no. But it is actually just showing everyone that, look, we can create assets on a very decentralized market.
You're also, Ayesha, adjunct professor of blockchain and distributed ledger tech at NYU. Somebody actually created that title?
Yes.
That is awesome.
I was thinking the same thing. I was like,
awesome.
wow, okay.
I mean, and again, it has to be at NYU in my sense, because they kind of cover everything that's cutting edge there, in my opinion. What do you think about this new administration? What does it mean for crypto in general? Because my thought is, I'm not sure this president would know a cryptocurrency if he tripped over it, but that's probably true for everybody out there in the world. Yeah. There's a select few that really understand what's going on out there. But what do you think this administration means for crypto technology, maybe from a regulatory perspective? Or just... From
regulatory perspective, yes, right? Like change of administration, change of SEC, change of CFTC, just more understanding, how digital currency works. That's number one fact. Even Department of Treasury is pro-crypto. And when we say pro-crypto, it's just that they understand what digital assets are, right? Mm-hmm. And then, same thing with the upcoming president. He may not know, but his sons do, right? And then every now and then we hear something, oh, Barron taught me this, or Eric taught me that. And we've seen Eric, at a couple of, blockchain conferences.
Okay.
So I think that's where the word, I guess, is coming from.
Okay, distinguish for viewers like myself the distinction that we make between a digital token and then blockchain, and then what the importance is to make sure that blockchain works.
Fartcoin is testing that, right?
Right, but what does that mean?
That basically means that you can use a blockchain, which is a decentralized ledger, where you and I transact, and then, Paul gets to see it, right? And that's to make sure that the blockchain is working, the technology is working. And we need the technology because why? Because it's open source. Everyone can see the two people transacting, and everyone can see, who's sending who, and then faster. The reason it's faster, it's like super quick, like a couple of seconds for instant settlement. And finalization of that settlement, right? Like, I cannot ask you for your money back once I've sent that to you. He would like to see that. And that's what the open source technology, the open source distributed ledger shows.
ETFs have been a major story for crypto and Bitcoin in particular. What does it mean to you? How do you guys use Bitcoin ETFs?
We don't.
You don't? Okay.
We don't. It's mainly an institutional product for investors who would like access to Bitcoin but don't want to actually touch the Bitcoin or Ethereum. It's an institutional product for them.
So how do you guys, do you trade in straight?
We trade straight Bitcoin and straight Ethereum and straight other coins.
Who's been buying the Bitcoin? Was it MicroStrategy?
MicroStrategy.
Yeah, MicroStrategy, yeah.
What's up with that? I mean, he went from his $25 million to, I think, like 25 billion at this point. He just kept buying Bitcoin and Bitcoin and Bitcoin, and he's about to get listed on NASDAQ, I think December 21st. And his largest holding is Bitcoin. He's one of the largest holder, if not the largest holder of Bitcoin.
Is that a good thing?
It's a very interesting thing, absolutely, right?
It is a thing, I guess.
It is a thing,
right?
It is a thing, yeah.
I mean, I guess, though, I guess I just wonder if it perpetuates fraud on blockchain, does that happen a lot? Because that is a risk too, right? That
is absolutely a risk. We've seen companies emerge like chain analysis, TRM labs that kind of prevent it or that kind of trace it. It has gotten better over the years. You can easily trace a transaction that is fraudulent. Very much less on Bitcoin or Ethereum, but we have solutions.
Ayesha Kiani, COO of MNNC Group, also adjunct professor of blockchain and distributed ledger tech at New York University, NYU. S&P 500 futures a negative 66 points. Dow negative 289. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a lower open. The focus shifts to the last major data point of 2024, the PCE index for November. That comes out in about an hour from now. It comes after yesterday's data. Well, it showed the U.S. economy expanded at a faster pace in the third quarter than expected. Now, later this morning, we have more on tap for you. We have a read on sentiment from the University of Michigan. That's at 10 a.m. Wall Street time. Over to NASDAQ futures, down more than 1.5%, 354 points. Dow futures down 0.6%, 284 points. And S&P futures down more than 1%, 66 points. The two-year yield, 4.26%, down 5 basis points. And the yield on the 10-year, 4.53%, down 3 basis points. The Bloomberg Dollar Spot Index down 0.2%. And we have Bitcoin at just above 93,000. Companies making news, that would be Google. It reportedly reduced its top management roles by 10% over the past few years. Now, that's according to Business Insider. It's pointing to CEO Sundar Pichai's meeting with employees. Then you have Walmart. They expect to miss short-term climate targets, issues including the availability of low-cost clean technologies. Well, that's slowing down its plan to cut emissions. And Boeing, it wins a $36 billion deal from a Turkish low-cost airline, and that's really dealing a blow to Airbus because that was previously the preferred choice. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. ECO Go. Boy, if it weren't for Lisa Mateo, I would have completely missed this. We got some economic data coming out.
Yeah.
At 8:30 today and at 10 a.m. today. Core PCE, that's what the Fed cares about, right?
It is. It is their measure of inflation, 100%. You also get personal income and personal spending, and it's already been a really tough week anyway. You're looking at the S&P looking at its worst week in about 4 months, and we're already looking to open a negative. So you wonder if this comes in a little hot, particularly after the Fed was talking very much about the fact that the inflation, they didn't say inflation risk to the upside, but it seems like the concern is that inflation might not go down as much as we thought.
No, and so I'm looking at the core PCE month to month, 0.2% is the forecast. That would be down from last month. But on an annualized basis, core PCE, and again, folks, this is what the economists tell us that the Fed looks at in terms of inflation. This is kind of one of the key measures they look at for inflation. Core PCE year over year forecast is to be growing 2.9% on an annualized basis. That'd be a little bit higher from last month at 2.8%. So that's kind of the number we're going to see at 8:30. We'll bring that to you. Then at 10 a.m., the University of Michigan, they're not just football, they're also really good economists there, and looking for some sentiment numbers there. And again, 74.2 is the index number that they're looking for. That would be just slightly higher from last month. So we'll have to see there. And they also have some inflation outlooks from their survey participants, so we'll keep an eye on that.
Okay, so I love NFIB and I love UMich.
Yes.
Like those are totally my jam. Because University of Michigan sentiment, you get 3 different readings throughout the month.
Okay.
And it's not only the inflation expectation, but so interesting to see how it's done on a political divide in terms of sentiment and current conditions, also in terms of are people buying a lot? And if they're buying a lot, are they doing it because they're worried about tariffs later, or are they
that's a
doing
good
it
point.
because they're just feeling really good? There's like super fun things to read between the lines. I won't be here for that though, so I have to leave you to break that amazing data and focus on it.
You're not here?
Well, no, because I mean, I can't.
You're bailing. Oh, because you have TV.
I'm bailing on you. I have
'Cause you
TV at 3.
Okay,
I mean,
I
you know,
see.
you got to
Okay.
spread me out over time.
Exactly, because I tell you, at 12 o'clock, folks, out of here, 12:43 train back to the Jersey Shore. But the UMich numbers will be interesting at 10 a.m., so we'll keep an eye on that. But again, futures looking a little bit negative here, off 1% on the S&P and off about 1.6% for the NASDAQ. So coming up, San Francisco Fed President Mary Daly. We can go to that. Awesome. Speaking with Lisa Abramowitz. So let's go to Fed Chair, President, San Francisco, Mary Daly, right now.
We don't know what the incoming administration is going to do. You know, new administrations, no matter when they come, always put a slate of programs together. And really, as a policymaker, I want to see the net effects once I see clarity about what those policies will be. So I was focused on the incoming information and what it means for the outlook. And today, I feel like we've got policy in a good place, the economy's in a good place, and we are prepared for whatever comes before us.
What happened in the past 3 months that caused the Fed and perhaps yourself to be much more concerned about the stickiness in inflation?
Well, the data happened, and you look at the data, and what's happened is that there's 2 things that have occurred. First of all, the economy remains in a good place, and the risks to the outlook are equally balanced between a risk to inflation or a risk to employment. That's where we wanted our goals to be. And we adjusted policy when we had confidence that inflation was heading down, and we adjusted policy some more to ensure that we have a balanced labor market that continues. So that's where we are. But then the data on inflation have been coming in a little slower. I wouldn't even say sticky or stalled. I would say the progress has just slowed relative to what we had wanted. But that's a typical pattern. It's bumpy. As you get to the, from 2.5 or 2.8 to 2, it's just a bumpy path. Go ahead, please.
But at the same time, some people were wondering if there was this stickiness, and I'm looking right now at, say, the Cleveland CPI now, and it actually has ticked up for the month of December from November. There was this question, why did the Fed cut it all?
Sure, and again, I'm going to reassert that it's bumpy. Remember earlier in the year, we had 2 months of data and people said, oh my gosh, it's reaccelerating, and then we had it come down. So inflation data, you can't focus on 1 month or 2 months. The most important thing for me was that we needed to recalibrate policy. I saw this as a close call. Was 75 enough to be the recalibration we were looking for, right-sized policy to meet the economy we expect, or do we need more? Ultimately, I determined that the 100 basis points was really the right level. Now I feel we've got that recalibration phase behind us, and we're in the next phase. And the next phase is really looking at the incoming information. We can return to a more typical pattern of gradualism for the Fed. We've practiced that where with a lot of uncertainty, you adjust the policy rate, then you wait watchfully, and you see what transpires, and then you make further adjustments. That's the phase I think we're now entering.
From September, the expectation in the markets was going into every meeting that you'd be cutting. Has that changed now? Should the expectation be that you won't be doing anything at any particular meeting? And from that question flows a second question. What are the criteria that you need to see to decide to go back to cutting rates?
Well, as you saw from the SEP, the median projection is 2 rate cuts next year. So that's already not every meeting or every other meeting. That's 2 rate cuts. I was very comfortable with that median. That makes sense to me. But we have to remain agile. I mean, the thing that's got us here is being resolute to achieve our dual mandate goals. Price stability was our focus when inflation was very high. The employment has come into the frame so that we're focused on both. But then we also have to be agile. The world is uncertain, so we pencil in 2. And, as that estimate or that projection gets further from when we made it, the accuracy of it probably falls. And so we're just going to continually take in more information, consider it, and every meeting, your listeners should think about this, every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
When we went into the cutting cycle, you were out front in saying you were concerned about the labor market and that we needed to make sure that we didn't lose the gains that we had. Now,
Absolutely.
at least coming out of Chairman Powell's press conference, it sounds like the focus has shifted to inflation again. Are you comfortable with that as this new phase that he's talking about?
Well, I think of it as a new phase as well, and I would characterize it slightly differently. I would say that for a long time, a persistent amount of time, protracted, we were focused almost entirely on inflation. That's because the labor market was quite robust and inflation was 7, 6, 5. That was the right way to focus. Then the labor market came into the frame. That didn't mean we turned our focus totally to it. It just meant that after a long period of focusing only on inflation, we were now focused on both. I think that is still the case, but I see policy as already in that position where it's supporting both. The policy is restrictive. It's going to continue to bring inflation down, and it's going to do so in a way that doesn't strangle the labor market, break it, and then give people lower inflation, but take their jobs. And that's not what we're trying to do. We're really working towards that soft landing.
Mary, you've used the word we a lot when you talk about what's happening at the Federal Reserve. We've had some people who are quite critical of the Federal Reserve and Chairman Powell's performance specifically in this news conference. One excuse that was given was that maybe he was struggling to reflect the lack of a consensus on the committee. How much diversity of thought, disagreement is there on the committee? You call it a close call for yourself. But was there some disagreement on the committee at this meeting?
Well, you know, I'm not going to speak about the entire committee. And when I say we, I stay focused on the things we all agree on, which is price stability and full employment, and our efforts to get there. You know, what I would offer is that we have, in my mind, the healthy level of discussion and disagreement. You know, you don't want an FOMC that thinks exactly alike. And I believe that what people are looking at is the fact that now the world is more uncertain and people are debating and bringing in their views, and that's appropriate. When it was a pandemic and there was only one direction to move interest rates, we had to do it quickly, it was obvious everyone agreed. When inflation's high, there was no disagreement, right? We're all marching up. Now you should expect more disagreement, more differences of opinion, but they're always framed to the same thing. How do we get inflation to 2 and restore or keep full employment?
When I hear the world is more uncertain, a lot of people hear, well, that's not about the data, that's about the incoming administration.
I would disagree.
Why would you disagree?
Because we have a variety of risks that are the ones we always deal with, right? The housing inflation. Right now, there's a substantial housing imbalance in the United States. The models and our data and our past experience all say housing inflation will come down, but we are uncertain about that, right? It hasn't come down as quickly as the models would have predicted, and so that's an issue. The labor market and consumer spending and growth are much faster and stronger than people would have predicted at this point, given the tightening we've done. There's a lot of uncertainty about the natural rate of interest. Where's the stopping point? And then, of course, there's geopolitical risks, the risk to global growth. That's going to be the backdrop, and then you have a change in administration. So I would say this level of uncertainty is normal in the sense that we've had all those things going on, and it's not as excessive uncertainty as after the pandemic, the financial crisis. Those were really big periods of uncertainty. So I think if you're a central banker, you just get used to uncertainty and you manage it.
Before we get into what some of the uncertainty about next year could look like, I am curious about how you're weighing how to preserve the job gains with the risk of running the economy hot for too long. And that's, I think, something people are struggling with. Is there an emphasis on the labor market even at the behest of inflation, just because it's been deemed better for inflation to be a little hotter as long as people keep their jobs?
Yeah, I would characterize it a little differently, but that is a terrific question. And it's one we spend, you know, as you know, Reserve Bank presidents spend a lot of time in the field, working in our district. I have the whole Western United States. And so I asked people the question, you know, where are you on this? And again, I hear that the economy is sort of in a good place, right? Inflation's coming down, it's gradual, and the labor market is solid, but there's one job for every unemployed worker. You know, that's in perfect balance. And our firms are saying we can find workers, and our workers are saying we can find jobs, and no one really wants that to break. So what people do not want is a recession. And I think one of the reasons sentiment's been rising since the middle of this year is because the recession risk is now behind us in people's minds, and they feel good about that. So what I hear more than you would think is don't get 1/10 off inflation and then break the economy. That's like, we can be patient, but you just have to head for 2, and we don't want the economy to break.
That's why I thought it was interesting that the inflation forecast for next year was shifted upward, even at a time where the unemployment rate was shifted downward. There was a sense that that was okay to have 2.5% inflation at the end of next year, even though it was above 2%. Is that the sort of feeling right now on the Fed, to be more patient with inflation because it's thought of as less punitive at a level below 3% than, say, a rise in unemployment?
Well, let me just say how I think about it, because here I will speak for myself. I'm not comfortable with the rate of inflation being 2.5, but we're continuing to work on it. And so we might end up cutting rates, cutting rates less if inflation is as sticky as that. But what I'm also balancing is I don't want to see an unnecessary rise in the unemployment rate just to get a quarter ahead on the 2% goal. So that is a balancing act, and I think ultimately we were just looking at the information coming in and saying, there's a lot of risks out there, inflation could rise, but you'll see, the inflation rising was partly why you saw the rate cuts pulling back. Is if we had 4, you'd see inflation go up more, and so this is a balancing act. But I think it also points you to the dispersion that you saw in the SEP, which I see as a feature, not a bug. You should have some dispersion when the world's uncertain. Otherwise, you would wonder if we're all in an echo chamber, but we're not. You can see that clearly, and you see the dispersion, and I think that dispersion really represents what we're facing. We might end up with fewer cuts than 2. We might have to respond and end up with more if inflation falls faster or you see a significant weakening in the labor market. And I'm comfortable sitting in that center court position and waiting for the data to come in, and we'll agilely respond as they do.
Well, do you think there's any chance that you might have to raise rates next year?
I don't see that on the horizon right now, but we will always remain prepared to do what is needed to achieve our goals. But I don't see that in the span of the most salient risks right now that I face. But, absolutely, that's something that we never take off the table.
Who owns the dot with no cuts next year? Come on, reveal. Whose is that in 2025?
Reveal.
Not going to tell us.
No, I'm not going to tell you. I'm no rookie, I'm rookie.
Just seeing how far I can
It's not a holiday gift I'm willing to give you.
Okay,
all right, I'm just checking.
Reveal. That was subtle.
President Daly's going to stick with us, I'm pleased to say. Thank you. Mike McKee, thank you as well, sir.
All right, very good. That was Mary Daly, the San Francisco Federal Reserve president there, with John Farrar, Lisa Bromwitz, and Ray Horton, kind of talking about
Michael McKee.
Oh, that's right.
That was Mike.
That was Michael McKee. Well, he's the economics guru.
He's the economic guy. It was interesting to just hear some of the headlines coming out of that. She definitely was talking a lot about that soft landing and Goldilocks, talking about how policy is still restrictive and bringing down inflation, but they don't want to hurt the labor market. But then mentioned a lot of the uncertainty that she was saying didn't have to do with the incoming administration, whether it's geopolitics, global growth, housing inflation, the natural rate of interest. She was trying to push on that narrative that it wasn't about President-elect Trump and his policies.
Yep. All right. So, President Daly saying may end up cutting less if inflation is sticky. So that kind of putting that on the table. So again, a great conversation there on Bloomberg television. San Francisco Fed President Mary Daly. Let's get an update here. Let's go to Lisa Mateo, get a Bloomberg Business Flash. Lisa, what do you have for us?
You got it. We got futures extending their losses from the week. Yesterday, stocks ended flat, but the Dow actually managed to snap a 10-day losing streak, the longest since 1974. So now we have Dow futures down about 0.5%, 231 points. S&P futures down 0.8%, 51 points. NASDAQ futures down more than 1%, or 293 points. We have the 2-year yield at 4.28%, down 4 basis points. The yield on the 10-year, 4.54%, down 2 basis points. The Bloomberg Dollar Spot Index down about 0.2%. A few companies making news. We'll start with Snapchat. Families suing the social media platform, alleging its design helped dealers sell fentanyl-laced pills to teens, and that caused overdoses and deaths. And then we go to Netflix. It got almost $400 million in tax credits for a new studio in Fort Monmouth, New Jersey. Yes, the space more than 1 million square feet and includes 12 sound stages. And finally, we told you how Disney was bringing that hit streaming kid show Bluey to the big screen. Well, now you can expect to see the characters on its cruise ships, at its theme parks. That will be starting in January. That is your Bloomberg Business Flash.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages around the world is brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. Lisa Mateo, what do you have for us today with newspapers?
Well, it's probably not going to be much for you, but more for Alex.
Yep. I feel this coming.
She feels it coming. Okay, new hair color, yay. It's called recession blonde or maybe mouse brown. Hairstylists say that their clients are a little bit budget conscious, so they're asking for a new color that it's a little bit more low maintenance, because it spends a lot of time and money. Blonde hair highlights. I know it. I've tried it. Okay, it takes a while. Sometimes you can sit there for hours. You can pay up to $400 a visit. And celebrities like Taylor Swift, you see her hair change.
Yeah,
like she went from the blonde bleach blonde, and now it's like toned it down a little bit.
This is my life too. This my trajectory with hair color and Taylor Swift are very similar. Because basically, if you see any blonde over the age of 30, like that there's color in that hair.
Correct.
Yeah. So like a lot of my hair color is natural, and I do the highlights. I'm like in and out in 20 minutes.
Because you're short hair.
Well, yeah, but even if I wasn't, I mean, the stylist just paints the highlights on, and then we're done. Like 20 minutes in the little heating thing, and we're out of here. Versus like when I used to go more like platinum.
I see.
It was a lot more labor intensive and a lot more expensive. So I feel this. We're going for contrast with contrast color in the hair.
I like it.
Paul,
it works
your
for
thoughts?
both of you guys. Natural gray, it works. I work hard on this, but
actually, my mom has amazing platinum hair.
So did my mom.
She doesn't dye it. It's just like her natural hair. So I'm like, let's go. Yes. Like when that moment happens, we're gonna be all in on that.
But it's expensive for you guys.
It is.
It is. Yeah.
It's very expensive, and
sad.
it's often like sometimes you have to do it.
What did
like
you
how
do
many
during
every
the
4 months
pandemic?
or so? During the pandemic, I did my own. I did the box.
I was very much a mouse brown brunette.
You were,
with some actually. No, I think I went in pretty early because I was back on TV in like June of 2020. Right. So I think that they opened the salon and it was just like, everyone's masked up.
I was at like CVS, Walgreens, getting the box. That's what I was doing. All right, so the next one. The chief executive of Toys R Us Asia, separate from the U.S. parent company, tells the Financial Times it's looking beyond kid toys this holiday. It's moving to kidults. So that's because, falling birth rates in Asia, right? So they're focused on the Gen Z kidults, which is people in their like early 20s to late 20s, that kind of group. Their spending counts for about 1/8 of the company's revenue, but sales are growing fast in China and Japan. So how they're doing it? Well, one thing, Hello Kitty, right? Big thing for women too. So they're trying to attract that crowd. They go to cultural trends like gamers. Genshin Impact. I don't know. That's a thing? Is that? Do I say it right? Aren't you the gamer expert? Genshin Impact, and also like Hollywood movies that are coming out. So this is the shift they're doing. So because they don't have as many kids in Asia, so now they have to switch to
birth rates
adults.
are down. It seems like I hear the story everywhere.
Yeah, they're down in Asia.
I mean, what happened to the Irish Catholic family when you get like 8, 10 kids? That's not happening.
Higher education.
Yeah.
That's what happened.
Well, exactly.
I'm not putting like that many kids through college.
Exactly.
You crazy?
You're exactly
I mean, I like toys, but like I don't need like a Hello Kitty thing.
Would you do the Hello Kitty? Yeah,
no, board games. I would do board games.
Okay.
No, I'm not a board game.
But other than that, I don't know. I'm not clutter. I don't like clutter. Don't let my desk here fool you. I don't like clutter. I don't like stuff. Just ask my husband.
I'm at this stage of my life. I'm just getting rid of stuff.
Yes. Doesn't that feel so good?
I always do that.
It's a good thing.
Throw stuff out.
Yep.
Okay.
Next up.
This one, Wall Street Journal, the James Bond battle. Okay, so here's the backstory. Okay, 3 years ago, Amazon required the rights to release Bond movies through when it purchased MGM. But the relationship between the family that oversees the Bond franchise and Amazon is pretty much falling apart. So with that new hope of a new Bond film is kind of in jeopardy. You haven't seen one in a while, because at the time the MGM sale, the Bond franchise represented the significant share of the $6.5 billion company that it paid for the studio. So the person who holds the power, her name is Barbara Broccoli, actually. Yep. She inherited from her father. So she's told friends that she doesn't really trust Amazon. So I don't know if James Bond, it's kind of in jeopardy now. I don't know.
Yeah, you're right. We haven't seen one in a while, have we?
I mean, like, I think I'm okay.
I'm okay.
That,
I'm kind of over it, but
I mean, Daniel Craig was so awesome as the last Bond, and the whole pained, like, you know, spy thing. Like, I don't know. Like, I don't need another Superman movie either. Like, I'm good. Like, we can dial that back.
But they
a
need
bit.
to make money because they invested so much when they bought it.
That's true.
And that's the issue.
He was. Daniel Craig was a really good Bond.
He was
such a
very
good Bond.
I mean, I grew up. My Bond was really. I guess Roger Moore was my when I was growing up. I caught the tail end of
Sean Connery.
Yeah.
No Pierce Brosnan takers, no?
Mine was Pierce Brosnan. That was my Bond growing up. Such nice hair.
Yes, he had
I did enjoy that, but that was more like cheesy fun, which incidentally is very much my jam when it comes to movies, cheesy fun. But Daniel Craig really took it to the next level.
His Skyfall they came out in 2012, made 1.1 billion globally. Okay. So yeah, he made a ton of money for that. So, but if you're MGM, that effectively was the asset value of that company.
Of course, yeah.
And that's what I forgot Amazon bought them. So yeah.
So wait, so are they trying to do an Amazon like James Bond TV show? Because I would super be down with that.
I don't know.
We don't know.
It's probably just any franchise. They need the green light from Barbara Broccoli.
Yep.
Oh, and here's some of the questions in the Journal article. What about a Moneypenny spinoff? Or TV spinoff with a female 007? But I feel like people would go nuts if that happened.
That's a big moneymaker. Have you guys ever been to the Soho House in the city?
Are you kidding? No.
No? I've been.
You've been.
How have I gone? And
Lisa Mateo's
whole
been there.
Sweeney has not been to the Soho House?
No, that's a great point.
What has happened in this world?
Exactly.
Okay, so it's this exclusive members-only social club, right? 45 Club, more than 250,000 members. Annual membership, $5,200 if you have to be 27 and over. They received apparently nearly $2 billion takeover, a new third-party consortium. That's all they said. They didn't give a name or the parties involved. And they said the takeover backed by billionaire chairman Ron Burkle. But 3/4 of Soho House's common stock is owned by the company's board, its affiliates. So the shares really actually took a tumble. Yesterday they were down 47%. Now they're down about 3%. But this is the thing. It's really been struggling with profitability. You've heard Soho House in the headlines all because of that, because they're just struggling to make some money, especially during COVID really hurt them too. But yeah.
Annual membership to all of Soho House's clubs costs $5,200 for those aged 27 and above.
No.
But there's in New York City, there are so many good, really old, high-quality clubs to join. And then there are a handful of newer clubs, like the Core Club, for example, which is also very good. I don't know where Soho House fits in. I mean,
no, Soho House is huge.
Is it?
Yes.
Like you walk in and you
For the
feel
young
very
crowd,
special.
Yeah,
like
no,
they
it's a
have
really
your
big
name
deal.
on the list. And
There's
you
no
gotta go up.
stuffiness.
No.
It's a whole.
Well, I like stuff.
You like stuffy. You don't know.
The pool upstairs.
The pool is huge. Yeah. We have some breaking headlines here.
Was that
I know people.
We need to rub noses with her a little more often. There's some breaking news here, guys, because President Trump-elect Donald Trump is posting about a possible government shutdown on Truth Social. He says, if there is going to be a shutdown, let it begin now. And this is added on to other reporting. NBC News saying that Speaker Johnson says he's expecting some votes this morning. Fox News reporting that a temporary fix to the shutdown that vote could take place at 10 a.m. But President Trump saying, you know what? Let's do it now. If we're going to do it now. In some ways, not a surprise.
I just don't know where President Biden and the administration is. I mean, he's taking up, President-elect Trump's taking up all the oxygen. Very interesting. We'll have more coming up. This is Bloomberg. Good morning.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest from Washington, D.C. and a possible shutdown of the U.S. government. Nathan Dean, he's the senior policy analyst at Bloomberg Intelligence. He's down there in D.C. He knows what's going on. Katy Kaminski is going to join us. She's the chief research strategist at AlphaSimplex up there in Boston. Talk about these markets in a 2025 outlook. Shana Sissel, founder and CEO at Ban Ryan Capital Management, get her thoughts on asset allocation and alternative strategies. Tracy McMillan, she's the head of global asset allocation strategy at Wells Fargo. We're going to get her thoughts on some of this inflation data we're going to get later on this morning. So lots of market talk coming up in this hour. Bloomberg Surveillance today is brought to you by Cohn Resnick Advisory, Assurance, Tax. Is your business future ready? Talk to Cohn Resnick's digital advisory team about strategies and platforms to drive competitive advantage here. Futures red on the screen here. Let's get a Bloomberg Business Flash right now with Lisa Mateo.
And we've got futures pointing to a lower open. Traders weighing that possible government shutdown, but also looking to PCE data. Comes out in about a half hour from now. And the Fed's preferred inflation gauge expected to cool in November. We shall see. NASDAQ futures down more than 1%. 282 points. Dow futures down 0.5%. 216 points. S&P futures down 0.8% or 49 points. The 2-year yield at 4.28%. That's down 3 basis points. The yield on the 10-year 4.54%, and that's down 1 basis point. The Bloomberg Dollar Spot Index is down about 0.2%. Shares of Novo Nordisk, well, they dropped as much as 27% in Copenhagen, its steepest drop on record. It said patients on its experimental obesity shot, well, they lost less weight than predicted in a study. Its shares are now down about 19%. But that news, Eli Lilly shares higher, up about 6%. And FedEx announced plans to spin off its freight division into a separate publicly traded company. Its shares are up about 7%. And Nike's second quarter results, well, that surpassed expectations. But here's the thing, its new CEO said the turnaround efforts may hurt earnings in the short term. Shares are down about 6%. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so you can check us out there. Let's check in with Nathan Dean. He's the senior policy analyst with Bloomberg Intelligence. He's down there in Washington, D.C. Nathan, you guys are busy down there in Washington today trying to get keep this government open. What is the latest that you see? Where are we?
Yeah, so Speaker Johnson just walked into the Capitol a few minutes ago, and he said something to the effect of, we're going to have a vote early this morning, potentially as soon as 10 a.m. To me, what that means is that they're probably going to move forward with an idea just to kick the can and just keep the government open for 2 to 3 more weeks, potentially kick this to January 10th. We also saw President Trump just say, look, if we're going to shut it down, let's do it now. I don't think that's, it's really going to lead to a shutdown right now, but it certainly increases the odds of a shutdown in January and or in 2025. President Trump really seems to insist that he wants the debt ceiling to be resolved with before he becomes president. I think just they need to figure out politically, because a lot of Democrats, I think, would also agree with that, would support that.
So when President Trump says, let's get it done now and shut it down now versus later, is that also that it's under President Biden's watch, or is that not part of it? It's just that he just wants to clear the air.
So there's 2 things. One, he just doesn't want it to be under his watch. It's much easier to say President Biden did this. But secondly, just remember, President Trump has a very ambitious agenda for 2025. And just over the last few days, we've seen that it's going to be extremely difficult to get all the Republicans on board. And so if you have a debt ceiling fight, remember the X date is not the end of the year. The X date, when Treasury runs out of its funds, is sometime in the summer of 2025. So if President Trump has a debt ceiling crisis in the middle of just after his 100 days of his presidency, that's going to take time away from doing tax extensions, border security, and so forth like that. So I think President Trump wants this out of the way now so that he can move forward with his agenda and not give the Democrats a way to use leverage against him.
So what's going to happen at midnight tonight, Nathan? What's the expectation down there in Washington?
So if Speaker Johnson passes this 3-week extension, and obviously he hasn't said this, but if he does, I think the Democrats and President Biden sign it, and we have this debate in early January. If he doesn't, I think Congress is going to spend the rest of the weekend. For those of us in Washington, we may not be able to go to the museums tomorrow, but for the rest of America, I don't think you're going to notice much until next week. That's when the government workers stop, non-essential government workers don't come to work. For those of you traveling over the holidays, TSA is essential. They're going to be working. But the last time we had a government shutdown over the holidays, a lot of TSA folks called in sick, so you could have a little bit more extra lines. But I think Congress, and I still stick by my call of 40% chance of a shutdown by Monday, I think Congress figures a way to kick the can down the road.
I'm taking a look at the market here, and we're definitely around session lows, at least for the S&P and the NASDAQ 100. You're seeing a little bit into the bond market. Is a potential shutdown wrapping in the debt ceiling, is that a market event?
So right now it's not. Look, we always struggle to look for company impacts. During the 35-day shutdown that President Trump had in Trump 1.0, the S&P actually went up. Debt ceiling is a different story. Obviously, Treasury yields react to that. But what I would say is that there's also this idea of just the sentiment factor. There's a lot of folks right now that are very bullish on the idea that a Trump presidency is going to be able to move forward with things like tax extensions and deregulation and so forth. But any type of political drama that we see and where they fail to move forward or they fail to agree certainly takes away from that sentiment. So I think a lot of folks out there are like, look, maybe not today, maybe not tomorrow, but, should we be concerned that a lot of our goals for the next 2 to 4 years won't be able to move forward because of this political posturing?
All right, Nathan, you're the only person in Washington, D.C. that we trust to get things done down there. So head over to Capitol Hill and get them working on this.
Yeah, he's still in his home office. What's up with that?
I know. Nathan Dean, he's down there in Washington, D.C. He Bloomberg Intelligence. He's our senior policy analyst. Folks, you want to know what's going on down there in Capitol Hill and what's going on in legislation, Nathan Dean is our go-to person. We appreciate getting a few minutes of his time. Let's get back to these markets here. Again, red on the screen. You got the S&P looking down about 0.9%. The NASDAQ trading off about 1.3%. Katy Kaminski joins us. She's a chief research strategist at AlphaSimplex. Got way too many degrees from MIT to even go over. So you do all this electrical engineering stuff, operations research. What do? You go to Wall Street. I don't figure it out. But anyway, Katy, thank you so much for joining us. We always appreciate talking to you. You really give us some really great insight here. We heard from the Federal Reserve here. How are you guys approaching 2025?
This week, sentiment changed quite a bit, but it hasn't changed the long-term signals that we see. We still see positive signals for equity markets. So there's still sort of positive momentum there, especially in the US versus other regions. We've seen short positioning in yields, which is consistent with the Fed's positioning this week as well, that we might be higher for longer for some point. And we've also seen some downward pressure to mixed signals in commodities. But I think the biggest thing that shocked me this month is just the US dollar. It's the only thing that has really strongly trended despite some of the recent turbulence.
So let's unpack that a little bit. It feels like it's still a U.S. exceptionalism theme, and you kind of say that versus the rest of the world, for example. But Mary Daly, the San Francisco Fed president, just spoke on our air and said that she is not comfortable with the rate of inflation at 2.5%. That really does imply that, no joke, if inflation doesn't come down, the Fed's going to cut less, full stop. Does that change the U.S. exceptionalism feel?
It definitely could. And, when people have asked me, what are the biggest things I'm worried about this year? If you look at how markets are trading right now, they're trading with positive correlation between stocks and bonds. And that generally happens when inflation is sort of a key factor and sort of the Fed's path. And so for me, the volatility and the potential for sticky inflation or an uptick in inflation in some point in the next year, especially with current deficit levels, becomes that sort of left tail concern that a lot of people are worried about. And so I think that there's that issue, and you've seen that as well in the steepening of the yield curve. You saw that this week that people are starting to price in long-term inflation expectations and long-term rates. So I think higher rates could be a concern, and it could dampen the U.S. exceptionalism narrative.
Katy, I know you guys at AlphaSimplex, you guys do everything. You trade everything. You look at everything. How about commodities here? What's your commodities play for 2025?
Well, commodities have been difficult because what you've seen this month is that weaker economic data has put downward pressure on commodities. So you've definitely seen some negative signals, particularly post-election and even this month. But we also have seen some pockets of interesting supply demand opportunities. So take a look at coffee, which has been, a really big mover. Things like cocoa, other more baseline commodities, but much more esoteric that have provided interesting opportunities. So far, oil is going to be a tricky one. It's been tricky this year. And energy is going to be in the debate. So I think that's something to watch and consider for opportunities.
Well, it's also in the debate, though, if you add to that are the tariff discussions. And we saw in the last Trump administration what that did to corn and soybeans and wheat in terms of the trade routes in Brazil and China and the U.S. in terms of exporting and importing. Are you expecting that to occur this time around?
Definitely. And, in the last Trump presidency, we saw a lot of volatility around things like metals, particularly, and we studied this. And if you take a look at tariff threats versus expectations, they can be very different. And so I think what's going to be tricky for markets is how much of those discussions actually come to fruition. And I think that's going to take time for the markets to understand what of these tariffs are actually going to happen and how much of that is going to bake into prices over long term and create opportunities for positioning in things like copper, oil, et cetera, over the next year.
So I'm looking at the yield curve, Katie. I think I've got a positive yield curve. I'm not a bond person, but I see a positive steepening yield curve here. None of this inverted stuff. What does that tell you?
So usually for me, when I'm thinking about the yield curve, I'm thinking about people pricing in long-term expectations for inflation. And if you think about that, what that means is that we might have finally stabilized. We've been looking for that steeper yield curve for over a year. The beginning of 2024, that was the big call, like, oh, steeper yield curve now that we're done with the cycle. And so for me, it really represents people trying to assess what is the equilibrium point for long-term rates, but also how much do I need to worry about my long-term cash flows based on inflation as well. And so right now, I think people are weighing current deficits and concerns over inflation, and that has caused some pressure on long-term bonds and created this more classic steeper yield curve that we learn in finance degree 101.
But, I wonder if the dysfunction in D.C., particularly wrapping the debt ceiling debate into a continuing resolution or budget, is also kind of de-anchoring that back end.
Definitely. Because I think when you add the volatility to inflation, it, kind of increases the ranges of outcomes. And so if there's a probability out there that we will have a lot of spending and that there could be a tumultuous path to that, that suggests that there's a lot more uncertainty around long-term bonds. And we've definitely seen that. Since 2022, we've seen increased volatility in bonds. And I'd expect this year, especially as we have those discussions, that the long-term volatility for long-term bonds will stay elevated.
All right, Katie, thank you so much for joining us. We always appreciate getting some of your time. Katy Kaminski, Chief Research Strategist at AlphaSimplex. Katie was talking about volatility in the bond market, volatility in the equity market. Looking at the VIX, it's up a solid point here today, 25.15. You get up north of 20. That gets people's attention.
Oh, yeah.
Below 20, you kind of feel pretty comfortable here. Above 20, it gets a little bit agitated. I'm calling the VIX out for Tom Keene because he keeps us focused on the VIX. So again, 25.17 on your VIX. S&P futures, let's just reset here. Minus 51, that's 0.8%. The NASDAQ off 285 points in the futures market, down 1.3%. 10-year Treasury yield, or 4.54%. So we got some movement in the markets on this Friday morning. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, U.S. stocks set to deepen losses. Traders wrap their heads around an increasingly softening outlook for interest rate cuts. San Francisco Fed President Mary Daly tells Bloomberg her forecast is not driven by policy changes that could be coming under the Trump administration. Now we have NASDAQ futures down nearly 1.5%, 300 points. Dow futures down 0.5%, 215 points. S&P futures down nearly 1% at 53 points. The two-year yield, 4.28%, down 3 basis points. The yield on the 10-year, 4.54%, and that's down 1 basis point. The Bloomberg Dollar Spot Index down about 0.2%, and we have Bitcoin at just over 93,000. Companies making news, that would be Foxconn, reportedly pausing its pursuit of Nissan, while Nissan negotiates a possible tie-up with Honda. Sources saying Foxconn wants to hold off to see if these two companies get a little bit closer to a deal before it starts to make a move. And the union representing Starbucks baristas, they will strike for 5 days. It starts today. Stores across Los Angeles, Chicago, Seattle. Its shares are down about 1%. And shares of Winnebago Industries, they're trading lower. They're down about 3%, and this is after the company turned in a disappointing earnings and sales. Demand for RVs starting to slow. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
I went to Winnebago. We pitched them on a bond deal. I don't know, 95, 96 in January in Des Moines, Iowa. Okay. And what was amazing to me, literally Winnebago's as far as the eye could see on this lot. It was unbelievable. And the guy turns to me and says, I'll sell them all by July. I mean, there were thousands of these things. And I guess he did. He says, I'll sell them all. There's no way.
Well, during the pandemic, they were huge.
Huge. Yeah, just amazing. Now, I mean, a great American company here. All right, I got the market. I mean, Alex, I got the S&P down 0.9%, the NASDAQ down 1.4%. I have no idea why. So I go to the markets wrap. Bloomberg, we've got people that tell us why markets are moving. U.S. stocks are set to deepen losses as traders grapple with an increasingly softening outlook for interest rates cuts and the threat of an American government shutdown.
And I would say profit taking.
Okay.
Because how many people are going to be working next year? So it makes sense to take in some profits.
Or next week, you mean? Yeah, next week. I'll be here.
I said next year. I meant next week.
Yeah, I'll be here. I'll be working. So I just don't know what's happening today. So let's talk to somebody who gets paid to do this. Shana Sissel, CEO of Ben Ryan Capital. Shana, what did you make of what was happening with our Federal Reserve, with some of the economic data we've received over the last couple of weeks? How is that kind of influencing your view of 2025?
So to be clear, the Fed has come to my view. I had always been under the assumption that it never made sense to do 4 cuts in 2025. In fact, I don't think it made sense to do a cut now. The economic data was not suggesting that that was necessary. Inflation has been sticky. The job market has been resilient, although it has softened, but that's kind of what we wanted to see. We have, strong consumer consumption. We have strong earnings. There was no real reason I could see that supported cutting rates, because there was no real friction in the economy that suggested we needed that. So when Chairman Powell came out and sort of said those same things, and also noted that there were 4 folks that dissented and that did not think that there should be cuts, I thought that was in line with what made sense given the data. Now, that said, the market reacted negatively because the market was optimistic that there would be 4 cuts in 2025. And he made it pretty clear that that's not as likely. And that as long as the data remains as strong as it is, they're going to have to be cautious about continuing and cutting.
So, Shana, if we wrap that in then to the market reaction, because a large portion of why they reduced their cuts was because growth is really good. Jay Powell said it in the conference. He's like, U.S. is growing. The economy is looking really good. So if we just look at this decline in the equity market, the sophisticated question is, do you buy the dip?
Well, I'm always a fan of buying the dip. I think that's always a smart idea. There's no reason to believe that this isn't a good time to buy the dip. The time that you want to pause on buying the dip is if it's not like the scenario we have right now. If it's more of we're selling off because there is negative economic conditions and people are kind of trying to get out of risk assets. So I am a fan of buying the dip. I think what I would suggest now is to be more deliberate on where you buy. There are areas of the market that are still expensive, but given that the economic data is broadly positive, I think that there's opportunities in the market outside of what we always talk about, which is the big tech names and AI, to find opportunities today. Although that said, I've seen some attractive stuff from parts of the tech sector that maybe we haven't talked about enough lately. But again, that gets to my point of being a little more cautious and deliberate about where you pick your spots.
Shana, when you talk to your clients, does valuation come up as a concern? Because, boy, it feels like it should be a concern.
Well, first off, let me apologize for continuing to sniffle. I always seem to get a sinus infection right around Christmas every year. And I'm like struggling with it right now.
Oh, I'm like convinced I'm getting sick. It's driving my husband crazy. But go ahead, it's fine. We can hear you.
Every year this happens to me, always around Christmas. But in terms of valuation, yes, actually that is the one area of concern. The concern is not around economic conditions. It's not even really about inflation or employment. It is about valuation and the areas that have done so well. Risk assets have performed well. We've seen obviously crypto do quite well. That was a space that back over the summer and early fall, I was pretty bullish on. And we saw it go straight up. You have all your big tech names have done pretty well. So they're pretty expensive. But that gets to my point about being deliberate about where you're looking for opportunity, because it exists out there and the economy is such that it gives us the privilege, if you will, to go out and find attractive names at attractive valuations that are going to benefit from the next part of this economic cycle.
Like what? What's on your radar right now?
So I really like two names. One of them was probably on my notes, and the other one is sort of newer, and I haven't updated my notes in like 2 weeks. So it'll probably be a bit of a surprise to you. The first is Leidos, which is a government contractor. This is a stock that I've followed for years. It is kind of unique in the sense that one of its most profitable and growing businesses is its health division, which I find really interesting. Also, as everybody's traveling over the holidays, including myself, if you pay attention when you go through TSA, all the machinery that you're going through is Leidos. And a lot of people don't realize they kind of have a stranglehold on that type of security. So I love Leidos. It's actually trading at a very reasonable valuation. Despite the fact that the stock's also done really, really well. And that's an example of a pick your spots kind of buy the dip. The second stock that I like right now, which is kind of a second derivative play on the AI phenomenon, is Marvell Technology. Again, a stock I've followed for a really long time. It is a chip stock. It has not participated like the NVIDIAs of the world because it's kind of a second derivative chip play. We're starting to see, and the CEO of Marvell has come out and talked about how, as we kind of transition to the next part of the AI revolution, Marvell is kind of set to benefit from that. So those are two names that I really like right now.
All right, appreciate that, Shana. Thank you so much, Shana Sissel. She's the CEO of Van Ryan Capital Management, joining us and giving us her thoughts on these markets. Again, futures pointing to a lower open this morning. We certainly had some volatility following the Fed decision, big 2.5%, 3.5% sell-off in the markets on the Fed decision. A little bit of a rebound yesterday, giving it back this morning. The S&P futures off about 50 points. That's 0.8%. The NASDAQ off about 280 points. That's 1.3%. That gets your attention. In the yield front, 10-year Treasury bond trading higher, bringing the yield down about 2.5 basis points, or 4.53% on your 10-year Treasury. And since Alex is here, we're definitely quoting WTI crude oil. We're now just a little bit lower, just below $70 per barrel. We'll have more coming up. This is Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We still got futures falling after a revised funding plan fails the House vote. We are also moments away from the last major data point of 2024, talking about the PCE index for November. So ahead of it, let's get to futures. NASDAQ futures down more than 1%, 276 points. Dow futures down 0.4%, 197 points. S&P futures down 0.7%. All right, we're starting to get the numbers coming in. We have personal income and personal spending, so I'll start there. We have for November, the survey was for 0.4%, coming in at 0.3%. That's for income. For personal spending, survey was for 0.5%, came in a tick lower at 0.4%. Now let's get to PCE. We'll go PCE year over year for November. The expectation 2.5% came in at 2.4%, and then we go to the core PCE price index for year over year for November. The expectation 2.9% came in a tick lower, 2.8%. So now we go back to futures. We have NASDAQ futures down more than 1%, 216 points. Dow futures down 0.3%, 146 points. S&P futures 0.6%, down 36 points. Let's go to the 2-year yield, 4.26%, down 6 basis points. The yield on the 10-year, 4.52%, down 4 basis points. We'll check in with the Bloomberg Dollar Spot Index, down 0.3%, and Bitcoin right now above 94,000. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. I don't know, inflation data a little bit, less than expected. Looking at the revisions, the personal income a little bit higher, a little bit lower on the personal spending from last month. But the inflation data come in a little bit lighter than expected there.
Yeah, I mean, you have to wonder if this is sort of in line. Like, this would be good news in that inflation is still coming down, so we didn't see a rise. So that disinflation narrative is still there. And the spending cooled a little bit, but not a lot of it. So just down up 0.4 versus something more dramatic, which is no change month on month. And you could argue that that's a good thing. It's not necessarily going to be too hot. Now, the income level, you maybe want to see a little higher, but just up 0.3%, but not too hot.
Yep, not too hot. Futures, S&P futures off 30 points. That's off their intraday lows here. We'll see how we
Yields
trade
moving
going
lower
forward.
on the front end. There's a nice bid now coming into the bond market in the front end. There was before, and now it's even bigger. So you wonder if that's more about the data in addition to some safe haven buying because of the government shutdown potential.
Yep, absolutely. So a lot of crosswinds out there for investors to deal with on this Friday before Christmas. Tracy McMillian joins us. She's Global Head of Asset Allocation Strategy at Wells Fargo, and she's a proud graduate of the College of William & Mary, which is the rival for my undergraduate institution, the University of Richmond. So the longest running football rivalry in the South. It's not Alabama, Auburn. It's not Georgia, Florida. It's University of Richmond and William & Mary. How about that?
How do you know all this stuff?
Because I went to University of Richmond.
But I could care less about the college I went to.
Well, yeah, but you went to a great college.
I did.
You went to Northwestern. Awesome.
But I don't know anything about the rival and the things and the stuff. I don't care.
Really?
Yeah.
Oh, see, I'm all into that stuff. Then I went to Duke for business school, so I'm all into that silliness as well. Tracy McMillian joins us. Hey, Tracy, how are you guys preparing for 2025? I mean, how are you thinking about stocks, bonds, asset allocation, alternatives, all that kind of stuff? How are you thinking about 2025?
Yeah, so thanks for having me this morning. So as we look into 2025, what we see are higher equity markets, and that's based on economic growth that we see a tad stronger in 2025, and that's supporting earnings growth. And then when we look over at the bond markets, what we see there are the potential for higher yields. So we have a forecast of 4.75% on the 10-year. That's about 25 basis points higher than where we are today. So that would mean price declines, but that yield will offset those price declines a bit. So we are, we're still thinking that those higher yields are an attractive place, especially as we get toward the top end of our forecast at 4.75%. And then we want to diversify across other asset classes, diversifiers. just in case, we do have a geopolitical risk on the horizon. Commodities, hedge funds tend to be good hedges against impacts that could hurt both equities and fixed income.
So, hearkening back to the data that just dropped out, does that help fit your narrative in terms of inflation still there but coming down, personal spending coming down, personal income coming down, but there's still growth in both of those areas? Does that support that thesis for you?
So actually what we see happening in the coming year is that inflation's likely to tick higher. We have an inflation forecast of 3.3% by the end of next year.
Oh, wow.
So that is why we have those higher yields. We don't think that's necessarily bad for the equity markets once markets get accustomed to a bumpy inflation path going forward, because stocks do tend to do okay in that 3 to 4% inflation range. That's the pricing power that we've seen for companies.
Tracy, global head of asset allocation strategy at Wells Fargo, how do you think about the U.S. versus non-U.S. in 2025? Because I've been hearing a lot over the last several months about international money coming into the U.S. market.
Yeah, that is what we're seeing. The U.S. exceptionalism persists, and that's because the U.S. does have relatively stronger growth. The U.S. also has an innovative business culture, business climate, and that is something that's also bringing people into the U.S. markets. And when we look abroad, we see the stronger dollar hurting currency translation for investors in foreign markets, but we also see a lot of structural issues, political issues in both the developing markets and the emerging markets that give us some pause there.
Where do alternative investments sit?
Yeah, so they have a place in a portfolio, especially for accredited investors who can purchase private alternatives. And we think that allocations to more market, not market directional strategies are going to be a better place to be in the coming year than more defensive alt strategies. We also like private capital, private infrastructure in particular looks really attractive, and private equity.
Tracy, what's the earnings out? Tracy, what's the earnings outlook for you in 2025? I mean, I'm hearing quite a bit of dispersion out there. How folks think about corporate profits in 2025. How do you guys think about that?
Yeah, so we think we're going to end this year at 245 on the S&P 500 and next year at 275. So that's about a 12% increase. Nice. And like I said, we think that the markets, the S&P 500 will rise on the back of those higher earnings. We see that coming from increased sales, from the additional economic growth, but we also see it coming from improved margins on the tax cuts and deregulation, and also just the cost cutting that companies have been employing.
Is that enough to offset the risks of immigration and the effect of the labor market and demand, plus tariff risk?
You make a really good point, Alex, because that is what the market is weighing. We have these pro-growth policies like tax cuts and deregulation, but we've got to balance that with the potential negatives of tariffs and immigration restrictions. And when we hear the Fed, we heard Mary Daly just now talking about how the Fed is going to be looking at the net effects of that policy. And so that's really where we have to focus. Right now, we think the net effects are probably going to be positive, but we do have to see how policy is actually enacted in order to make that calculation.
All right, Tracy, thank you so much. We appreciate that. Tracy McMillian, she's Global Head of Asset Allocation Strategy at Wells Fargo in Winston-Salem, North Carolina, home of Milner's American Southern Restaurant and Catering. Good eats down there.
I knew that's what he was doing when this was happening.
The biscuits and gravy down there at Milner's, I've been there a couple of times. to die for. Not quite as good as Cracker Barrel, but very good.
I still haven't had Cracker Barrel.
Let's
We've
go.
had this conversation.
Let's go.
Where is there a Cracker Barrel?
We'll go out
around
on
here?
Route 78 out in Jersey, and we'll just shoot
I'm
out
going to
there
New
from the
Jersey
city.
for
Yes.
Cracker Barrel?
Yes. So you have to traverse from Brooklyn, somehow
how
get
hard
through
that
Manhattan.
is?
I know it's
No,
hard.
Staten
I know.
Island.
Staten Island.
You go
Okay.
through Verrazano.
Yeah, and then we'll go out Route 78. We'll go to Cracker Barrel, get the Country Boy breakfast, loosen your belt, and sit right down.
And
That's
make
how
an
you do
appointment with your cardiologist
it.
afterwards.
Cardiologist afterwards.
That's
All
right. I'm only going if Lisa's going.
Oh, she'll go. I mean, no problem
no,
whatsoever.
she's not going.
She'll
You
take
crazy.
a day off from the granola and all
For
that
the
stuff.
country breakfast.
We're going for the country breakfast with biscuits and gravy. With our news in New York City, here's John Tucker.
All right, guys, with a midnight deadline now just hours away, a revised funding plan backed by President-elect Trump and Elon Musk has been rejected by the Republican-led House. That's after Musk and Trump came out against a previous bipartisan stopgap measure yesterday. House Speaker Mike Johnson spoke after 38 members of his own party voted alongside nearly all Democrats to reject the proposal.
Very disappointing to us that all but 2 Democrats voted against aid to farmers and ranchers, against disaster relief, against all these bipartisan measures that had already been negotiated and decided upon. Again, the only difference on this legislation was that we would push the debt ceiling to January of 2027.
Well, Donald Trump took to social media a short time ago, writing, "If there is going to be a shutdown, let it begin now." President-elect Trump also taking to Truth Social to issue a new threat on trade, warning the European Union will hit the block with tariffs unless they increase purchases of American oil and gas. The U.S. is the world's biggest exporter of liquefied natural gas. More than half of American LNG exports went to the EU last year in the wake of Russia's invasion of Ukraine. A delegation of American diplomats has arrived in Syria this morning to meet with representatives of several Syrian factions. One of them is the rebel group HTS, which is designated as a terrorist organization and overthrew the country's longtime dictator, Bashar al-Assad. And President Joe Biden this morning announced plans to cancel student debt for about 55,000 public sector workers as his administration pushes to zero out balances for more people in the final weeks of his administration. The move, which represents the cancellation of $4.28 billion owed on federal loans, pushes the number of individuals who have now received relief under Biden administration programs to nearly $5 million. And the Pentagon says it is sending drone technology to New Jersey.
Yeah.
This is technology
Bring
which
it.
could disable the drones in an emergency. So, I don't know.
New Jersey, who cares? I mean, John, we have so many problems in Jersey. Drones is the least of our issues, right?
Well,
you
it's
think about it? Who cares?
remember the hype when all the drones was, delivery drones, this
Right.
drone, that drone. Everybody was now they're against
right.
drones.
I guess. I don't know.
Global News 20. That was more like commentary than news. Global News 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Alex, Paul, and Lisa.
All I know is yesterday afternoon around 1 o'clock, I'm driving from Newark, New Jersey, down to the Jersey Shore compound, and the petrochemical plants were spewing out these huge flumes of smoke. I have no idea what was being pumped out into our air, but I'm like, and people are worried about drones in New Jersey? I mean, you got to be kidding me.
Well, there's one facility along the New Jersey Turnpike.
Yes.
Everybody knows in Linden. It's called the Linden Generating
That
Station.
was it. That was it. You're
Phillips
right.
66. There has been a flame coming out of that plant, one of the towers, for as long as I am
Exactly.
alive.
And we're worried about a couple of drones in the air. All I know yesterday was people were. You couldn't get into Newark Airport. The lines were crazy in traffic getting into. I guess yesterday was just a big travel day ahead of the Christmas holiday.
Yeah,
I
the
guess.
trains were packed.
Trains are packed.
Trains are packed.
The
People carrying their
airports were
suitcases.
crazy.
Yeah.
So I guess people were just taking off today and taking off all next week.
We
That's
missed
the
the memo.
strategy.
Did we miss
missed
the
the memo? We
we
missed the
miss
memo.
that
So here
memo?
we are. So we're all here. All right, folks. Bloomberg Surveillance brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still in the red, and it comes after the Fed's preferred inflation gauge cools to the slowest pace since May. Core PCE increased 0.1% from October and 2.8% from a year earlier. So right now, NASDAQ futures down 0.8%, 187 points. Dow futures down 0.2%, 113 points. S&P futures down 0.5%, 31 points. The two-year yield 4.25%, down 6 basis points. The yield on the 10-year 4.49%, and that's down 6 basis points. To commodities, we have Brent crude down about 0.5%, $72 a barrel. WTI crude $68 a barrel. And we have spot gold up 0.6%, $2,609 an ounce. The Bloomberg Dollar Spot Index down about 0.3%. Few companies making news. We'll start with Google. Reportedly reduced top management roles by 10% over the past few years. Now that's according to a report from Business Insider. It pointed to CEO Sundar Pichai's meeting with employees. And then we go to Walmart. It expects to miss short-term climate targets. Its issues, including the availability of low-cost clean technology, well, that's really slowing down its plan to cut emissions. And you'll be seeing a lot more of actress Charlize Theron. That's because she's the new face for the renamed anti-aging skincare line Dior Capture. Yes, women's wear daily.
Invest in your skin.
Exactly.
Invest in your face,
Yes,
guys.
thank you, Paul. Appreciate that.
She does. It's the first ad released January 1st. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. If you're buying jewelry for your significant other, this is the way you do it. You
Okay,
say,
tell me.
give me a blue link. I click the blue link. I click buy. Done.
What's a blue link?
To like Tiffany.com
Okay.
or something like that.
Okay.
To, you know, or whatever the jewelry thing majiggy is.
Okay.
That's how you do it.
That's how you do it.
I think that's how you do it. Some people take more time, though. They actually put some time and effort in looking into this stuff. Our next guest does that. Ankur Daga, CEO of Angara, joins us here on the jewelry business. How is the jewelry business?
Last quarter has been great. Just to back up, COVID was amazing for the jewelry business. People couldn't go out, they couldn't travel, so all that money went to luxury goods.
Wow.
So 2020 to 22 were record years. 2023, there's a retrenchment. 2024, first half, also a retrenchment. That being said, I think Q4 has been great for the jewelry business overall, especially December.
So you guys sell jewelry. I'm on your website right now. What's selling and what's not?
Two major areas of growth. One is lab grown. It's been incredibly popular.
So interesting, because I remember covering lab grown when it first started to be a thing, like so many years ago, and everyone's like, I don't know about this. What do you think made it change?
So back in 2018, when lab grown came to the forefront, FTC said a diamond is a diamond, whether it's lab grown or natural. Lab grown sales were 2% of diamond engagement rings. Now they're almost 60% of diamond engagement rings.
All right, so
pretty tremendous.
Can
Yeah.
you put this into context for me? Because I'm from the old school where you went out and bought a diamond, and I took my bonus from the prior year and bought the diamond.
Yeah.
Talk to us about lab grown. How is it positioned in the marketplace? How should we think about lab-grown diamonds?
So it's chemically, physically, optically identical to natural diamonds. To any jeweler in the world, with the naked eye, you cannot tell the difference. Only very specialty labs can. It used to be 15% cheaper than the natural equivalent. Now it's 90% less.
90%?
Wait a second.
What?
Yeah.
So why would anyone buy a natural... Lisa, I'm speaking to Mr. Mateo right now as we speak. Why would anybody buy a natural diamond, I guess?
Yeah, the case for that is getting tougher and tougher over time. There's two historical reasons why people bought. One is this inflation hedge. It goes up in value over time. And two is there's a financial flex. If you're wearing a 2-carat or 3-carat diamond engagement ring, it says something about you. Both those cases for buying a natural diamond have gone away. Now, when you can get the lab equivalent for 90% less, that financial flex goes away. When diamonds have gone down in pricing, so over the last year, roughly a 23% fall. Over the last 2 years or 2.5 years, roughly a 50% fall.
50%?
Yeah.
I did not know this.
So why does it get easier to produce? Is that what happened with lab-grown diamonds?
So
cost went down?
Yeah, so lab-grown has gotten much more popular. There's much more investment in machinery, and they're becoming much more efficient. So that has caused the market to transition from natural to lab-grown, and as a result of that, natural diamond prices are falling.
Well, if I'm a jeweler, I'm not happy. I'd rather sell a $10,000 natural diamond versus a $1,000 lab diamond?
Not necessarily. So, yes.
Necessarily. Yeah, I know how to
He's the
retail
guy.
works.
He's the guy.
No,
So you know.
understood.
All right.
Understood. I think the missing part of the equation is that the jewelry market will grow tremendously over the next decade. So right now we're at roughly 380 billion worldwide. I think that gets to $1 trillion in a decade. So roughly a 10% CAGR over the next 10 years.
Alex and Lisa, they can't wear more. They're already blinged down. I mean, what's gonna? How does?
We're really
where's
not,
that growth coming from?
Yeah, so one example, there's 2.5 million engagements in the US every year. There's 62 million married couples.
Huh.
Now, the 62 million married couples, a lot of them have dreamt of a 2 to 3 carat diamond engagement ring, but that's been out of reach because that's $25,000 to $30,000. Now you can buy the lab-grown equivalent for under $5,000. So there'll be a huge upgrade cycle that
All right, so
results.
I'm sorry, I have to ask.
Yeah.
Alex and Lisa, would you accept the lab-grown diamond ring?
Oh, totally.
Yeah,
I accepted like
Really?
the $200 ring that my husband bought from the Met that had a pearl in it.
Yeah.
Yeah, absolutely.
I know.
All right.
But I think we're on the low maintenance scale. I mean, I'm talking for
Yes,
me and Lisa. We could be wrong, but we're probably high maintenance on other things, but not when it comes to that kind of stuff.
Skincare.
Yeah, skincare,
Skincare, right.
for example. What kind of stuff is also selling, like sapphires, gems, emeralds, that kind of thing?
Yeah, so colored gemstones have been incredibly hot. So while diamonds are depreciating, color stones are appreciating quite quickly. In terms of value, they've gone up over the last 4 years anywhere from 12 to 18% per year. So in many cases, over double or triple what they used to be selling for previously. So just as way of context, 5% of engagement rings in the US a decade ago were color stones. Now it's 15 to 18%. In a nationwide survey we ran, 25 to 30% of soon-to-be brides would prefer color stones over diamonds. So we're seeing this dramatic transition away from natural diamonds towards color and towards lab-grown.
You know what I'm really into? Stacking.
What's stacking?
Stacking, where you put one ring on top of the other. Like I would love to have like a stacking bunch of gold bands with like little gemstones on each one.
Is Mr. Steele listening? I mean,
well, no, actually his name is Pospisil, but yeah. No, I'm not going to make him do it, but that would be the ideal. Like a stacking thing is like a thing.
I'll talk to him. Now, here's another question.
Yeah.
Do people disclose to their significant other that they're giving them a lab diamond versus a natural diamond? What's the protocol there?
I think, when it started, probably not. Now, I think disclosure is absolutely necessary. You can go into any jewelry store and get the diamond tested. So if you do not disclose and that happens, that, probably spells trouble for your relationship.
This is a complete, as the kids call, disruption to the diamond marketplace, isn't it?
Yeah. So, technological disruption and the jewelry business have never been in the same sentence until now.
Yes.
But the transition is dramatic.
But talk about the actual diamond industry then. Like, what does this mean for like De Beers or like the big diamond players?
Yeah, so De Beers has been pretty interesting. So 2022, their mining operations had $6 billion in revenue, roughly $1 billion in EBIT. 23, they fell by 40%, $3.6 billion in revenue, minus 250 EBIT. This year, they're going to be 20 to 25% lower than that. So it's been tough. Anglo American is trying to sell De Beers or take it IPO, but as you can imagine, it'll be pretty difficult.
I don't even know where to go here. I mean, you've totally just shocked me here. Holiday sales.
I love when this
How's
happens.
this year going?
It's been great. Holiday season has been up double digits. We saw in the first half of the year, whether you take LVMH/Tiffany or Signet, which owns Kay and Zales, sales were down anywhere from 3 to 10%. I think the holiday season will surprise a lot of people to the upside. And it's interesting, jewelry is really a leading indicator. So when the economy is doing well and consumer sentiment is high, jewelry does exceptionally well. But in a downturn, it's the first to turn down. Right now, I think we're on the upswing.
Real quick before I let you go, are we seeing any resales?
Of jewelry?
Yeah.
Yeah, so, the auction market is super interesting. So we can see that there's been a big shift from investing in diamonds to investing in color. So, a couple of examples. There was a Burmese ruby that sold on Sotheby's. It was a $5 million sale that was pretty tremendous, much higher than expectations.
Wow.
Cool stuff.
I mean, I love this discussion. Ankur Daga, CEO of Angara, joins us here talking about the jewelry business. Fascinating business. I had no idea that these synthetic diamonds, I don't know, they become such a thing. And if you can't tell that, You really got to think about it. If
This
I
is
were
literally
getting
blowing
engaged
his
today, I
mind.
have to really think about it, right?
Oh yeah, well, I mean, I don't know. No, you're the kind of guy that would still do them natural.
I don't.
He would still do
I
them
don't
natural.
know, man. The discount is unbelievable. Anyway, we'll keep on top of that stuff. There's a lot going on out there. This is Bloomberg. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Margaret Brennan, host of CBS's Face the Nation. I have no idea what they're going to talk about. They've got a million topics that they could go to, but we'll talk to Margaret and see what she wants to handle this weekend. George Ball, chairman at Sanders Morris on asset allocation, stock picks, and all that stuff. Folks, George Ball was a legend on Wall Street when I started in 1986 when he was CEO of Prudential Beige. He's still at it. How about that? That is so cool. Ben McMillan, CIO at IDX Advisors, talks about ETF outflows following the Bitcoin slide. We had Bitcoin. We're now well below 100,000. That thing just rips all around. I have no idea what drives it, but it's a commodity, and there you go. So we got a lot coming up in this hour. Let's kick it off. Lisa Mateo, get a Bloomberg Business Flash.
And more economic data out this morning. Looks like a step in kind of the right direction for policymakers looking to cut interest rates further in 2025. Core PCE increased 0.1% from October, 2.8% from a year earlier. Futures still lower. We have Nasdaq futures down 0.8%, 186 points. Dow futures down 0.3%, 165 points, and S&P futures down 0.6%, or 36 points. The 2-year yield 4.25%, down 5 basis points, and the yield on the 10-year 4.49%, down 6 basis points. The Bloomberg Dollar Spot Index down 0.3%. We have shares of Novo Nordisk down 21%. It said its patients on its experimental obesity shot lost less weight than expected. There you go. And FedEx, ANX plans to spin off its freight division into a separate publicly traded company. Its shares are up 8%. And finally, Nike posted an earnings beat, but its CEO said his turnaround efforts could hurt earnings in the short term. Their shares down 5%. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel, she's sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. Federal Reserve Bank of Cleveland President Beth Hammack, formerly of Goldman Sachs, in explaining her dissenting vote at this week's central bank meeting, said interest rates should be held steady until there's more progress in cooling inflation. Let's get some more on that with Michael McKee. He covers all the economic stuff for Bloomberg at television. So, Mike, again, we had a dissenting vote. How unusual is that? And how unusual is, I guess, her reasoning, Beth Hammack?
Well, it was the first dissenting vote by a Fed Bank president for a couple of years, so it is unusual, but and it was also interesting because it's only like her second or third meeting.
That's what I was thinking.
So
She's new,
coming
right?
she's coming right into the job and dissenting, so we can put her down in the hawk category now. But basically, she wanted to put out a statement. That's a thing now. When you dissent, you explain why, and her statement says basically the economy's in good shape. Inflation's been coming down, but it's sort of stalled out, and given the health of the labor market, we should basically put our attention on inflation. And she says, I believe monetary policy will need to remain modestly restrictive for some time. Based on my estimate that monetary policy is not far from a neutral stance, I prefer to hold policy steady until we see further evidence that inflation is resuming its path to our 2% objective, which, of course, about a half hour ago it did with the PCE numbers. But obviously, as you heard from Mary Daly earlier today, it's a close call, and there's going to be people who disagree.
How many Fed officials do you think actually really kind of agrees with what Hammack was saying? Because Mary Daly also was like, will not tolerate inflation above 2%. Like, it sounds like there is a lot more hawkish leaning in the Fed than we might think. Am I reading that correctly?
It depends on how we define hawk, of course, but we did see in the dot plot that there were 4 people, presumably one of them was Beth Hammack, who did not think the Fed should have cut rates this last time. There may be others who felt that way and yet didn't express that feeling, so because they figured it was a done deal. So yes, I think it's going to be fairly evenly divided, and we're going to have to, I hate to say it, watch the data.
Real quickly, Mike, we got you here. You're getting paid to do this stuff. The PCE data came out today. What data point are you looking at, and what does it tell you?
Well, I think the most important thing in the under the hood was under personal income, which didn't rise overall as much as people thought, but wages and salaries were up 0.6%, which is the strongest in more than half a year. So Americans are still getting paid more, and that's going to be good news for keeping the expansion going. You know who didn't get paid more? Equity holders. Dividends. Dividends were down, negative income from dividends.
All right, so I'm gonna be at the Squan Tavern tonight, pizza and beer night. Somebody's gonna come up to me and say, "Hey, Paul, what did you think of the inflation data?" What do I quote? The core PCE year on
well,
year.
First, you go to a different bar.
Yes.
Yes.
But they
so
still
it was
ask
the
you that.
2.4% number, right? I say I came in at
2.4% is year over year. It was a
The
tick
Fed
up a
would
little
like
bit.
that to be 2%?
Well, that depends on how the Fed wants that
see,
at
I
2%.
can't do that at a bar
but
in Jersey.
it depends. Yeah, I was going to say you can't do that at a bar in Jersey. You could say that the Fed's target is 2%.
Okay.
And it went up to 2. So it was a little bit higher.
Okay.
But that's
But the
because
trajectory.
that's because of base effects.
Base effects.
If you really want everybody to get up,
That's gonna work at the
throw their
Squan Tavern
drink at
tonight.
you, and run out of the bar.
All right, very good.
Say base effects.
Michael McKee, thank you very much. He covers all the economics. He's got all the answers for us when it comes to this economic data, and we appreciate it. Margaret Brennan, Face the Nation, Sunday mornings, CBS Television Network, and Sunday afternoons on Bloomberg Radio. Margaret joins us here. Margaret, I have no idea what you guys are going to do on Sunday. Hopefully you guys have some sense of what's going to happen, but I guess it kind of centers around whether our government's going to be open come Sunday morning.
Right, and going into holiday week, and will any of them who work for the federal government receive paychecks during that time? Will it disrupt your travel? TSA agents work for the federal government.
Oh, I forgot
Is that
about
going to be a problem for you?
Yes.
We're gonna try to talk to the Homeland Security Secretary later today about some of those logistical things, and they're already in planning mode at the federal level to try to figure this out, particularly given the high volume of travel. Border Patrol, they work for the federal government. U.S. military, they work for the federal government. So while people like to say, let's upend the system, there are real-world consequences. We're going to talk about that and the ability to get something done that would at least get us through the weekend. We'll talk about that with Tony Gonzalez, a Republican from Texas who has been in contact with Elon Musk, who seems to be pulling some strings from outside the government.
Mm-hmm.
Also talk to French Hill, who's the incoming chair of the House Financial Services Committee.
Yeah, I would love to get the read also from them. Like, how do they feel about Musk tweeting stuff on Twitter or X that then directly influences what happens in the halls of Congress?
Well, it's going to be the art of the possible here. No matter, as a CEO or a startup company guy, you can say, cut this, do this, be more efficient. But the founding fathers created a system of checks and balances. You need 218 votes to govern. If you cannot get that, you can't legislate. You can't keep the lights on. And it seems to be like this idea of just increasing efficiency is totally at odds with knowing how a system works and knowing how government works. And this tension we're seeing play out in this immediate crisis may be something that's replicated. May not be so easy to get tax reform done. May not be so easy to get all those things that Donald Trump promised on the campaign trail actually through.
Margaret, like you at CBS News, we here at Bloomberg are in the news business, and President-elect Trump has been in the news quite a lot over the last week as it relates to all of this government funding issue. Where, though, is the White House? Where is President Biden? We have not heard anything. And what do you guys make of that?
In terms of shutdown, well, the White House issued a paper statement, one of those very political things last night saying, hey, what's going on here, guys? If you want to keep the lights on, go back to the bipartisan deal that was hammered out with Democrats. There's a simple solution here. That was the White House urging of not veering into crisis at the direction of the president-elect. So Joe Biden, going into this holiday week, he was spotted in front of the cameras, going into the White House with his grandchild. He is sticking around town, as is the vice president, whose vote may be needed, by the way, in the Senate. So they are sticking around to help figure out this crisis, but no presidential address. You're right.
Yeah, it feels like we're getting all the news from social media at this point. Margaret, who else do you have on the show? What are some of the topics that are standing out for you?
Well, we will have the Homeland Security Secretary. We will also speak to Joe Manchin, the outgoing independent one-time Democrat who is turning over his seat to a Republican, West Virginia, going fully red now. But we reflect with him on what governing actually looks like. He's pretty frustrated at how ineffective this last Congress was, and his ideas on how to fix the system. And we'll bring you the latest reporting on whether the lights stay on or not.
Margaret, thank you so much for joining us. Always appreciate it. Margaret Brennan, host of Face the Nation. You can see that this Sunday morning on the CBS television network. And you can hear Margaret Brennan this weekend on Bloomberg Radio. Listen to Face the Nation Sunday at 2 p.m. in New York, Washington, D.C., and 92.9 FM in Boston. That's Face the Nation this Sunday at 2 on Bloomberg Radio. With our news in New York City, here's John Tucker.
All right, guys, good morning. Let's start with this. Alleged CEO killer Luigi Mangione, back in New York, could now face the federal death penalty. Let's get the update from Bloomberg's Gina Cervetti.
Mangione was charged with murder by federal prosecutors for the killing of United Health Group executive Brian Thompson. A lawyer for the alleged killer told a U.S. judge in New York that one of the federal charges was death eligible. Karen Friedman Agnifilo complained that the theories between separate cases filed by state and federal prosecutors seemed different, and that she's, quote, never seen anything like what is happening here in over 3 decades of practicing law. Gina Cervetti, Bloomberg Radio.
And the Republican-led House rejecting a temporary funding plan backed by President-elect Donald Trump with just over 24 hours to go before a government shutdown. The bill failed with 38 Republicans voting against it in defiance of the president-elect. Republican Congressman Steve Scalise of Louisiana blamed Democrats.
Tried a few different things today that most of our members went for, but the Democrats decided they want to try to shut it down. But we're going to keep working.
Congressman Scalise says Republicans are going to regroup, come up with another solution. Democratic Congressman Jamie Raskin, however, pointing the blame directly at the incoming president.
There's a very simple way out of this, and it's the only way out of this, which is to go back to the original agreement that was hammered out over many weeks of painstaking bipartisan negotiation. And then everybody can support it, the Democrats in the House and the Senate, the Republicans in the House and the Senate, and Elon Musk will not be our presumptive new president.
Well, Donald Trump took to social media earlier today to say if there's going to be a shutdown, let it begin now. President-elect Trump also threatening the European Union with tariffs if its member countries don't buy more American oil and gas. And finally, a holiday tradition continues. NORAD's Santa tracker preparing to go live. At the Pentagon, Major General Pat Ryder delivered the seasonal update.
Nice.
On December 24, NORAD will track the journey of a very special aviator, Santa, as he makes his way around the globe. And if you see red and green lights in the sky, that's probably him.
Please note this is an authorized object in the sky, not an unmanned aerial vehicle, so check twice before you shoot it down. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg, not a drone.
No.
Santa.
Excellent. Exactly. Do not shoot them down. John
Of course,
Tucker,
if
thank you
there's
so
a
much.
government shutdown, I don't know if they like.
Yeah,
still
who's
track
doing
him.
it?
Yeah, but he's not employed by the federal government. Oh, you
No,
mean the
but you
drone,
could
the
track
operation?
him.
Oh, the tracking.
Santa's
okay.
an independent
but that's essential,
contractor.
and that's essential. Let's be
Yeah,
clear.
Santa's
So
essential.
I think it's going to be fine.
Yeah, you don't want to be shooting down Santa and Rudolph and the whole thing, so just don't go there. All right, we're going to have more coming up. This is a Bloomberg Good Morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this features report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, well, stocks trimmed their earlier losses. The Fed's preferred measure of inflation slightly undershot estimates. Treasuries rally. We have Nasdaq futures down about 0.8%, 184 points. Dow futures down 0.3%, 163 points. At S&P futures down 0.6%, or 35 points. We have the 2-year yield at 4.26%, down 5 basis points. The yield on the 10-year, 4.51%, and that's down 5 basis points. To commodities, we have Brent crude $72 a barrel, WTI crude $68 a barrel. The Bloomberg Dollar Spot Index down about 0.2%. Shares of U.S. Steel, they're down 6% after it warned fourth quarter earnings will be lower than expected. And shares of Winnebago Industries trading lower. They're down about 2% after the company turned in disappointing earnings and sales. I guess demand for RVs a bit slowing. And more sports in streaming. FIFA has signed Netflix to sign a U.S. broadcast deal for the Women's World Cup in 2027 and 2031. That's according to the Associated Press. For our more on-demand news 24 hours a day, subscribe to Bloomberg News now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live on the radio. We're live on YouTube as well. So you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. All right, next guest. Here we go. Began his career as a stockbroker. Listen to this firm, E.F. Hutton and Company. If you wanted to sling stock back in the day, you went to E.F. Hutton and Company. Then Bache and Company. Then Prudential Bache. Some of the best research analysts for generations came out of Bache and Company. Then he goes American Stock Exchange, Chicago Board of Options Exchange. Oh yeah, he did some duty in the U.S. Navy. Our next guest, George Ball, has seen it all. He's the chairman now of Sanders Morris. George, thank you so much for joining us. Appreciate chatting with you. It's been a pretty good year for 2024. I mean, the S&P 500 up 23%. George, a good year for you and your clients. What are you telling your clients about next year?
The interesting part about the stock markets is that most of the so-called experts, which I pretend to be and am not, spend the majority of our time talking about what was and explaining it, rather than taking the risk of talking about what is going to be. 2024 was a remarkable year, even with the declines in the last few days, in terms of equity returns. And therefore, the question is, what is going to happen and what's going to cause it next year? Two important points. One is when the Fed came out with its comparatively hawkish stance the other day, the market clearly interpreted it negatively. The Fed's not going to cut rates that much. We look at the Fed funds rate as a barometer for the market. Let's sell. That's upside down. The Fed is taking its more cautious stance in terms of future rate cuts because of a belief that the underlying economy is very strong. If the economy weren't strong, the Fed would not be comfortable mitigating the number or the size of rate cuts that are coming up. Strong economy, high earnings, that's good for the market, all other things being equal. And so you can enter at 2025 thinking, I'd rather be participating fairly fully in equities rather than being on the sidelines. Doesn't mean it's going to replicate 2024. That's not likely to happen. Secondly, there are going to be very unpredictable exogenous events. Exogenous is a big word for saying that the Trump administration, not only the president, but the senior advisors to him, are going to do things that are not predictable, aren't foreseen, and aren't conventional. And that is going to throw monkey wrenches into the marketplace and the sentiment from time to time. So you need to be aware that there's going to be difficult moments, tumultuous moments that are hard to anticipate. But in the midst of it, a economy where people working hard, a lot of people working, and earnings are apt to be pretty good. So be optimistic, but be aware of heavy seas ahead from time to time.
How defensive in that do you want to be, George?
In terms of equity exposures, not particularly defensive at all. The best mitigator of risk is cash. And going beyond cash to shorter duration of fixed income securities. Therefore, I think that the smart investor, the prudent but not a craven investor, is going to hold more cash than normal, or cash-like things, as a mitigant against risk. But their equity exposures will be comparatively daring. The staples, the defensive stocks, utilities, which have some AI exposure, are probably not the right place to be. You want to be looking for the higher growth type of items, and probably continue at least something close to market weight exposure to the Magnificent Seven. So with your equity holdings, be a little bit smaller in terms of the percentage allocation to stocks, but be comparatively high risk in terms of which stocks you own.
Lisa, Alex, when I started on Wall Street in June 16th, 1986, George Ball was a leader of global Wall Street, then at Prudential-based Securities, one of the greatest firms on Wall Street. George, I got to ask you.
He's really fanboying on you right now, George. I'm just going to say.
George, in 86 years of age, dude, can you give us just give us your perspective? How is global Wall Street, how has your Wall Street changed from when you were starting in the business to right now? Because you're still a leader on Wall Street. How has it changed?
To those of you who may be actually watching this on a streamed version, behind me right here is a ticker tape that a ticker that ran in the crash of '29. It's original ticker. It's got tape from that day. I'm not that old, but back in the day when I began, the people on the floor of the New York Stock Exchange were the rulers of finance. It's where big events took place. It's where the people were legends. They were towering figures. And today, the New York Stock Exchange floor is a movie set. There are no stocks traded there, but people have a lot of pancake makeup on. That's a big difference. Wall Street has spread to all corners of our nation and the world, which is good and bad. The bad part is the personal relationships between people, the non-technology driven relationships, the non-AI fabricated relationships, created trust and bonds that are much less strong and really much less confining in terms of the standards of personal behavior that existed back then. So I regret, and I think we suffer some from the impersonalization of the financial world and the financial markets. Yeah, technology lets us do things that even an old codger like me could not have believed back in, quote, the day.
George, thanks so much for joining us. Always appreciate getting the value of your perspective on these markets here. George Ball, he's the chairman of Sanders Mars. He has been on Wall Street. I don't even know when he started, but way back in the day. But again, some of the greatest firms in the history of Wall Street, George has led. So we appreciate getting his perspective here on these markets. But boy, the technology on Wall Street, I can tell you what it's done. It's lowered costs for investors. And that, at the end of the day, is probably the bottom line, I think, for a lot of people.
Also, has it democratized it as well?
Exactly. Another great point.
That as
Another
well.
great point. Yep, exactly right. So, with your app on your phone now, and you can get, with ETFs, very low cost ability to invest in all types of asset classes that really wasn't available even a generation ago, and that's a good thing, I think, for most investors. But a guy like George Ball, he bridges so many generations, so it's great to get his perspective. S&P, we are down here. Futures, we're going to get the market open for you. It's about 26 points on the S&P 500. NASDAQ down 156. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Paul Sweeney and Alix Steel with your opening bell report. Now, we all know the Fed scaled back the number of cuts it anticipates next year, but the latest data likely reassure policymakers that the economy is cooling. But how are the markets going to take in that new data on this final trading day of the week? We're off and running, so let's get right to it. We'll start with the S&P 500 down 0.5%, 0.5%, 32 points at 5,838. The Dow down 0.3%, 131 points, 42,225. And the Nasdaq, well, that's down nearly 1%, 182 points, 19,191. The 2-year yield at 4.27%, down 5 basis points. The yield on the 10-year, 4.51%, and that's down 5 basis points. The Bloomberg Dollar Spot Index is down about 0.2%, and we have Bitcoin down nearly 2.5% at just over 95,000. At the open, I want to check in with shares of Novo Nordisk because they've really been taking a beating this morning. They are down about 20%. That is your Bloomberg opening bell report. Paul and Alex.
All right, Luis Mateo, thank you so much. We appreciate that. Alix Steel, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers. Alex sitting in for Tom Keene here this morning. We're streaming on, where are we streaming? On YouTube.
YouTube.
Yeah,
We're on YouTube.
That's the internet, right?
Yeah, it's the
that's
interweb.
Okay,
Yeah.
interweb. Okay. YouTube.com, search Bloomberg Podcast, and that's where you will find us. Again, Lisa just was calling out, Bitcoin. I don't know. I mean, it's down a couple of percent. 95,000. We were just at 107,000 a cup of coffee ago, as Tom Keene would say. I don't know what that means. I kind of view, again, my view of Bitcoin, it's a commodity. So all I need to do is have a sense of supply and demand, and that's how I trade it. That's my understanding. I know some people view it as a store of value. Maybe it's a hedge. I don't know. It's a commodity to me. But let's check to somebody who kind of does this stuff for a living here. We're checking with Ben McMillan. He's the CIO of IDX Advisors. Ben, how do you guys at IDX view Bitcoin, and kind of how do you see the funds flowing here? Maybe just over the last, several weeks where we've had a big run up since the election. Now a little bit of a pullback here.
Yeah, so I think you're spot on, to kind of look at Bitcoin as a commodity, a high beta one, granted. And it's, it's important for investors to realize too that this isn't necessarily going to provide the diversification benefits going forward that it might have in the early history. So we always caution investors that, yes, this has commodity-like kind of properties, and you're seeing that in the, audience that's buying it is starting to go more mainstream. People are thinking about it as kind of a hedge against fiat instability, much like they, think about hard assets in a portfolio. And, what's interesting is when you kind of look at the path going forward. So, we've had kind of, a regulatory hostile environment, or at least, an environment categorized by kind of regulatory uncertainty as it relates to all things crypto, including who would even regulate it, the SEC versus the CFTC. And now all of a sudden, we've, post the election, where Bitcoin, by the way, the Bitcoin lobby was extremely active. Now, I think a lot of this is just kind of celebratory that, hey, there's a path forward where Bitcoin isn't going to be, just endlessly chastised as the domain of money launderers. Now all of a sudden it can go more mainstream, innovation can happen in the space, and I think that's what we're seeing in the price action.
What about flows? Talk to me about ETF flows. I love looking at that in terms of where the trend is going and what that tells us.
No, look, flows is everything. In fact, I think it's this show that coined the term, flows before pros, because, it's especially when you look at just everything since kind of 2008, this kind of QE fueled environment, and flows matter disproportionately more for Bitcoin, because, there isn't kind of, you don't have all these other, dynamics necessarily that you have with equities and companies or, other macro instruments like fixed income. Bitcoin really is kind of just pure supply and demand. And so the flows have been very strong. Of course, more recently, we've seen liquidations, which again, leverage is very endemic with Bitcoin. That's something we always caution too with investors. This is an asset where non-US investors are the biggest players, and that's something people have to kind of calibrate their understanding to. And when you move outside, the US, particularly in Asia, there's a lot of leverage associated with Bitcoin. Now, of course, you've got Michael Saylor at MicroStrategies, taking out convertible debt to buy Bitcoin. And so the flows really matter. Now, I think longer, in the intermediate term, the flows have been very constructive, mainly because we've seen a broadening out. To your point, these ETFs, the ETFs represent kind of the more mainstream economy. The early enthusiasts all already had Bitcoin, via Coinbase. So I think the long-term flows are very constructive. Of course, in the short term, we've had a repricing of risk post the Fed meeting. Bitcoin is, the canary in the coal mine there. So I don't think any of that is necessarily concerning. But, the long-term picture for flows in Bitcoin, I think, is very constructive.
All right, Ben, let's step back here. At this time of year, it's a good opportunity to maybe take a look at year ahead. How are you guys thinking about the best opportunities, stocks, bonds, alternatives, commodities? What's your focus for 2025?
Yeah, it's a good question. I would say, generally speaking, it's one of cautious optimism. We've had just 2 amazing years in equities, and we talk to a lot of clients because we have an OCIO business. So it's interesting. We see a lot of different perspectives across all asset classes, and there's a lot of concern out there that yes, kind of the forward-looking expectations for earnings growth, which of course powers stocks, is good. But is it time to maybe rotate out of some market cap weighted technology into equal weight technology? So we're seeing a lot of that, at least conversations. This isn't necessarily raising cash on the equity side, but starting to broaden out, which I think is a healthy response to kind of where we are in the cycle. On the fixed income side, this is probably where we're having most of the conversations. For most of all of our careers, the risk of duration within a fixed income portfolio just didn't exist. And now all of a sudden, 2022, people are realizing that, oh my goodness, not only is this a real credit or a real risk in line with kind of credit risk, but also it's one that's, was correlated with equities. So this is where we're seeing people start to be more active in their portfolios, start to introduce more active managers into their fixed income portfolio, which we think makes sense. Active exposures that can kind of navigate the spectrum a little more actively. And then also alternatives. We've generally been, big believers of alternatives, commodities, hedged-like exposures. You guys were just talking about the democratization of ETFs. Mm-hmm. That's a very powerful force for investors to kind of, manufacture what would have been considered hedge fund exposures, a couple of years ago within a, proverbial 60-40 portfolio. So to answer your question, I would say it's one of cautious optimism. On the equity side, maybe think about rotating more into equal weight or, broader exposures. And then within portfolios, if you don't have alternatives or hedge-like exposures, think about adding that.
When you talk about flows, I'm looking at the TLT, for example. It tracks bonds that are 20 plus years of duration, and it's down. It's been falling for about 2 straight weeks. Had a terrible day on Wednesday after the Fed. At one point, we hit the lowest level since October of 2023. And I'm just wondering, when you look at stuff like that, how much do you feel like is a positioning situation, and we're just kind of squaring till the end of the year versus like a real sea change?
That's an excellent question. So when you look at fixed income, especially the long end of the curve, which you said, TLT is capturing, that's one where I think we're seeing a risk shift. And I think that's a function of, recalibration of expectations around Fed comments. I mean, it was very interesting to hear Powell's comments, along the lines of, inflation, which is, they've got a dual mandate, but let's be very clear. Inflation is the more important of the two. And Powell himself has said as much over the years. And their own inflation expectations, surprised them. Today's number on the PCE was good. It was kind of in line, which I think means, all right, this is not certainly a red alert scenario, but the risk that inflation comes back this year is on investors' minds. And I think we're seeing that reflect in just flows permanently, or not permanently, but structurally moving out of TLT or the long end of the curve into more of the belly of the curve, or even the short end of the curve, or things like credit. Again, now all of a sudden duration risk has exploded, and people are looking and saying, all right, well, if corporate balance sheets are good, earnings are looking good, maybe sitting in some shorter duration junk bond ETFs, which now exist, courtesy of the proliferation in the ETF landscape, is better than just long duration. So I think, to your point, I think those flows, part of that obviously is kind of squaring with the year-end rebalancing, but I think a lot of that is kind of migrated out of the long end of the curve for the foreseeable future.
Alternatives, how do you guys think? Alternatives, Ben, how do you guys think about alternative investments?
It's a good question. So, generally things like, I'll just take, kind of the classic example, things like managed futures, that are actively, active exposures, multi-asset class, things that are, very different than kind of traditional asset classes. And there's a lot of good products out there. Again, I like to always point to the ETF landscape has done a phenomenal job of kind of bringing these hedge fund, these alternative type exposures to the market. But things like commodities, managed futures, there's, multi-asset, kind of go anywhere, all weather beta type funds, just things like that are generally characterized by either kind of having persistent hedged exposures, or multi-asset class, more active exposures. And of course, within that, you've got, classic private equity, venture capital, private credit is huge right now. We would caution that a little bit. That's a space where, anytime you're locking up capital, you've got to really be, you've got to really kind of price that risk. But yeah, I mean, across the alternative spectrum, just, multi-asset class, hedged vehicles, things like that.
Ben, thanks for joining us. Really appreciate getting some of your thoughts. Ben McMillan, he's the CIO of IDX Advisors, talking about these markets, including the crypto space. And again, Bitcoin, I'm calling it out for Tom Keene, off 1.3% today, 96,100 for the cryptocurrency there. Again, remember, just a week or so, 4 or 5 days ago, we were $107,000 on that risk-on kind of view of the marketplace in the Trump trade. With our news in New York City, here is John Tucker.
All right, guys, House Republicans back to the drawing board after their latest plan to avert a government shutdown, backed by President-elect Donald Trump, went down in defeat last night. 38 Republicans voted with nearly all Democrats against the measure. It would have extended current funds into mid-March and suspended the debt ceiling for 2 years. Now, Bloomberg's Derek Wallbank says this raises question about Trump's ability to control his own party.
There's been this operative theory since Donald Trump won the election that he has unified control and he's going to be able to do exactly whatever he wants to in Washington, and there are no guardrails. And that was a hypothesis severely tested last night.
Bloomberg's Derek Wallbank. Meantime, Fox reported the House could vote on a temporary fix to avoid a shutdown this morning, and Donald Trump was writing on social media this morning, if there's going to be a shutdown, let it begin now. Tesla recalling almost 700,000 vehicles because of an issue with the warning light on the tire pressure monitoring system. According to a letter from the National Highway Transportation Safety Administration, the recall includes certain 2024 Cybertruck, 2017, 2025 Model 3, and 2020 to 25 Model Y vehicles. A Russian ballistic missile attack on Ukraine's capital, Kyiv, early today killed at least one person and injured 12 others. Moscow claimed it was in response to a Ukrainian strike on Russian soil using American-made weapons. At least 3 loud blasts were heard in Kyiv shortly before sunrise. And it's beginning to look like another record for holiday travel. AAA predicting that more than 119 million people are going to travel at least 50 miles from home between Saturday and New Year's Day, which would top the previous holiday season high. That was set back in 2019. The 2 weekends on either side of Christmas look to be some of the most crowded times on the road and at the airports. The trade group Airlines for America also foresees record travel, saying it expects U.S. airlines to carry 54 million passengers during a 19-day period that started Thursday, and that's going to end January 6th. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg.
Dude, it started yesterday. The train from Penn Station that stops at Newark Airport was jammed at 1 o'clock yesterday.
Sounds
with people
awful.
with monster suitcases going everywhere. I couldn't believe it was packed. It was. I've never seen it like that. And then, I'm looking at the roads leading to Newark Airport, packed like I've never seen before. So yesterday, I think, was like a crazy, let's get away, let's take off Friday and just shoot out and take all next week off.
I love that because it means I'm going to get in on Monday super fast.
super
when
fast.
I came in here, it's
Oh,
the train's
you
going
gotta
to go,
work
go,
Monday?
go. I'm working
Oh.
Monday, Tuesday. We're not going anywhere. We're just staying.
I'm so sorry about that.
About working or
Yeah, the
not going
farthest
anywhere?
Lisa, are you traveling?
John
for the
Tucker's
holiday?
going to be home sleeping.
Yes.
Well
I
deserved.
might go
though.
skiing, actually.
Well
Okay.
Yeah,
deserved.
I think you should. I think you should go up to Killington. They've made some good snow.
We'll see.
That is
How long
awesome.
a drive is that?
Any drive is too long.
I hear
After
this.
putting 600 miles a week on my car,
Yes.
it's just like, I just don't want to go anywhere.
I do not blame you at all. Maybe I'll walk to the store and back or something
I'll
if I
walk.
need to.
We're going to
but-
walk to the beach every day. That's kind of what we do.
Okay,
Walk to the
yeah.
beach.
Paul has
6
a
blocks.
plan to walk on the beach tomorrow at 8 a.m. at
Yes.
16-degree weather.
Yes.
Without the wind chill. It's a thing that shouldn't happen.
But
I don't know.
that's what you do. You got to celebrate
It's not what you
the
do.
winter time on the Jersey Shore. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks mixed, and this is after the Fed's preferred inflation measure showed prices rose less than expected in November, and that's a pretty much welcome sign. Policymakers just trying to get that inflation back to the 2% target. Right now, the Nasdaq down 0.5%, 123 points. We have the Dow little change, down about 5. The S&P 500 down 0.2%, or about 15 points. The 2-year yield at 4.28%. That's down 3 basis points, and the yield on the 10-year 4.51%, and that's down about 4 basis points. We have the Bloomberg Dollar Spot Index down about 0.2%. The Japanese yen up 0.5% at 156.56 against the dollar. The euro, British pound stronger. We have Bitcoin down more than 1.5% at just over 95,000. Shares of Trump Media Technology, they're down nearly 6%. This is after the president-elect moved his entire $4 billion stake in the company into a trust that he controls. And then you have Tesla down nearly 3%. That's amid a broad-based sell-off in tech stocks. And where are we seeing a rise? Yes, FedEx up 2%, but also Carnival up 3%. Forecast adjusted EBITDA for 2025 of about $6.6 billion. That is your Bloomberg Business Flash. Paul and Alex.
There you go, the yachts.
I know.
The cruises, man.
I know. It's a thing. It's a thing. We're not doing the cruising in September. Well, maybe the next year.
But maybe that's the peak. Like maybe when you finally bite the bullet, that's when it's kind of over.
Exactly.
We'll see.
All right. Alix Steel sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Undergrad for me, University of Richmond Business Administration. Okay. Then I went and got my MBA in Business Administration, which is basically the exact same thing, just done over. But that's what you had to do back in the day if you wanted to kind of move up on Wall Street. But then there were people at the Duke Fuqua School of Business that were getting their PhD in Business Administration. Okay. So do you take accounting and like finance 3 times? I don't know what they're doing.
I don't know.
Our next guest is doing that. Our next guest is doing that. Bonnie Chow, researcher, Harvard University, formerly of Bloomberg News, and she's co-author of the book Smart Rivals: How Innovative Companies Play Games That Tech Giants Can't Win. Bonnie, I mean, just really, I would say for the last 15 years, the leading driver of this stock market has been technology. Technology's led the market, and even really the last couple of years, it's been the Magnificent Seven and those AI names. How do the rest of the companies deal with and compete against some of these big tech companies that have so many resources at their behest?
Well, a lot of companies, traditional companies, saying so. There in the future, there's only going to be one winning product that has both digital attributes and the traditional attributes. So those big techs are coming to my backyard to eat my lunch. So I should learn. I should master my digital skills. As long as I learn faster, then we will meet together to the winning products. But I think this, in our research, we found this mindset is really misguided because you will end up always be playing a catch-up game.
Oh, sure. Like, there's no way you can compete with a hyperscaler with those deep pockets, right? So, like, what's a good strategy then?
So our research, I wrote this book, Smart Rivals, with Harvard Business School professor Feng Zhu. We think that they should be smart rivals and play a very different game. Don't compete heads-on with tech giants. You should amplify what you're already good at, what you're best at, and leverage the digital technology. So you should double down your strengths, your competence, and then you will craft a new path.
So do you have any examples of companies that have done that, are doing it?
Oh, Paul, you just mentioned like that in the tech market, in the stock market, tech companies are dominating. Actually, many people would be surprised. There's one traditional company that outpaced Meta, outpaced Google, Apple. It's actually Domino's Pizza.
Ah.
What? Yeah.
Got a great app.
Wait, how do we understand this?
Yeah, well, their secret is not in their dough. Their secret is in their order fulfillment and delivery. So even before the digital age, they're very good at delivering. But now they're leveraging the technology to do the digital innovation. Their app is really good and tracks it. Users are able to track the dough from the minute they're in the oven and to the minute they're at your porch, your home. And also, this company is testing how to deliver pizza by robots, autonomous vehicle robots, and drones.
I tell you,
Wow.
when my oldest son, he's 28 now, when he was probably 13, he got in somehow, one of the first apps that I had ever interacted with was the Domino's Pizza app. So he would be ordering Domino's Pizza all the time. Granted, we live in New Jersey where there's real pizza. You don't get Domino's. But Domino's was coming to our door all the time. I'm like, who's doing this? And it was my knucklehead son would come down. He's like, yeah, that's my pizza. So that's Domino's. I get you. They've been ahead of the curve.
Every company is a tech company. It just matters like how you do it. You don't have to be like a chip company to be a tech company, is what you're saying.
Well, Domino's former CEO actually said, we are a tech company that happens to make pizza.
Lloyd Blankfein, the former CEO of Goldman Sachs, I'm going to say 10 years ago, said Goldman Sachs is a technology company. And that's where they put most of their CapEx is in technology. So it's everywhere. What are some of the mistakes that companies make?
Good question.
Do they try to I got to compete against some of these big tech? I mean, what are some of the mistakes they make?
Oh, well, they think like, oh, I don't have data. I really have to sort of master data and then try to, maybe develop my own Gen AI model. But this is wrong because these technology infrastructures are costly and takes very long time to build. Well, again, the key message is to focus on what you are really good at, because our research found the data actually only helps you to a certain level. So once it passes a certain threshold, the data creation plateaus when the volume of data reaches to a certain level. So you got to think about creative way to collect the data to utilize what you have. Maybe it's your offline stores, or maybe it's your existing long-term relationship with your customers.
What if you are an actual small tech company, not one that makes dough, but that makes technology? Is the best strategy to sort of build a small product and be super niche in hopes that a hyperscaler kind of buys you? Or is there a way to go it alone and be innovative?
Well, innovation definitely is a key, but the scenario depends. Sometimes it's good to join a tech giant, be it Alibaba or Amazon, to join their ecosystem. But there are also opportunities or scenarios that exist that you can become a hub of your own ecosystem. And basically, to get those tech giants into your ecosystem, bring Alibaba, bring Amazon in.
I think one of the biggest trends in technology over the last couple, 3 years, and certainly even in the stock market, has been Gen AI. How does your research look at Gen AI, and maybe how other companies should embrace it, prepare for it, whatever?
Yeah, Gen AI definitely is a hot topic, but the general principles of our book still apply. Doesn't matter whichever technology we're talking about. The next thing you guys probably would think about, maybe it's quantum computing or something else. But the key message is that, we can think about Gen AI as an enabler. It actually makes things easier for traditional companies. So basically, down to the earth, the large language models are about imports that you already have in your traditional businesses. So it will help you to make things easier. So, well, back to Domino's, they're working with Microsoft to leverage Gen AI to help operate their pizza restaurant better.
I just would have never put that together. I haven't had Domino's pizza in like a century.
No, because we live
in a place where there's
we
other
have pizza every corner of the city. So.
That's truth. All right, Bonnie, thanks a lot. It was great to catch up. Thank you so much for joining us. Bonnie Chow, author and Harvard researcher, discussing her new book, Smart Rivals, and how companies can compete with America's big tech and all of that. Looking at the markets here, so once we opened up and we wound up getting all the trend followers in flow here, so you're looking like CTAs, etc., volatility followers, you're seeing the NASDAQ actually down only 0.7%, the S&P down only 0.3, and the Dow Jones Industrial Average actually trying to claw its way a little bit higher. So it looks like we might have a little bit of a buy the dip scenario from futures up till now. We'll see how we close after that PCE data came in relatively in line and that story of lower prices continuing.
Yeah, exactly. So a kind of a mixed tape here, but I'm going to call out Bitcoin again, off 1.7%, 95,000. I'm all over it because I know Tom Keene would do it. I'm doing it for Tom. He's at home. He wants to know what's happening. But again, I remember Eric Balchunas saying 30,000 to 60,000 was ETFs, 60,000 to 100,000 was the Trump trade.
Okay,
so maybe
I believe
a little bit back.
Oh, I love this song.
I love this song. The best piano solo ever.
Yeah.
This is Bloomberg.